lovely morning from here in Delhi, and hope as always that each one of you are absolutely fine, hale and hearty. So in this particular session, what we are going to take up, quite obviously each one of you are absolutely keen to know, so we have decided to pick up a very significant chapter, that is bills, accounting for bills of exchange. This is the topic which we are going to pick up, but before we start the things, let me clear all the formalities which we are supposed to actually go through. So first of all, let me write here bills of exchange. Accounting for bills of exchange, correct? Name of the chapter is Accounting for Bills of Exchange. I accept that each one of you know all the each one of you are very well aware of all the intricate points related to this particular chapter, but in spite of that, as I just told a moment ago, that we are going to start right from the scratches as if you have not done ever this particular chapter. Correct? But we are not casting any doubts over your intelligence, over your what we call comprehension. We know that you are already aware of the basics, but in spite of that. So bills of exchange, this is the topic which we are supposed to start. First of all, you need not require to write at this moment anything, correct? Because it's a rough work, we are simply trying to have a bird's eye view of this particular chapter. Suppose Mr. A is a seller, correct? He is a trader and he sells goods. You need not require to write anything at this moment. He sells goods, let us say worth rupees 50 lakhs. He sells goods worth rupees 50 lakhs, let us say, to a client, Mr. B. A is the seller, he sells the goods to Mr. B. We presume goods are being sold on 1st of January, let us say 20th. 1st of January 20th, we sold the goods to Mr. B. We had been doing trading with Mr. B or this client, let us say, since quite a period. So, never ever it happened that he defaulted in our payments. Let us say these goods were sold on credit, and let us say we gave him a credit period of 3 months. Now suddenly, to our utter amazement, when 3 months passed, Mr. B did not make any payment to us. So for a while we thought there could be some problem with Mr. B, because we have been doing a lot of transaction with Mr. B's, as I said, since quite a long period of time. So we thought, well, we should wait a bit more. We waited for another month. Next month gone by, still no payment received. Obviously there will be some hiccups in our what we call heartbeats will rise, but at the same time, keeping our past records and our past traditions and past relationships, we thought better to wait for yet another month. We waited for yet another month. That means even after the due date, we waited for another 2 months. 3 months had already gone by. After that, second month also gone by. Total 5 months. Still no payment. Now definitely we will start getting worried. 50 lakhs after all is not a mega amount, isn't it? It's quite an amount. 50 lakh is not a small amount for any person, howsoever rich he might be. So we tried to actually give him a ring. Correct? We gave him phone calls, we rang him so many times, but in spite of that, we found to our amazement that he did not pick up the calls. And one day, we got the news that Mr. B is no more in the city anymore. He has left the city and he has moved over to some another city, and no one knows actually where he has gone. Suddenly, A will feel crestfallen. He will feel definitely as earth has shaken. He will feel as if a big earthquake has taken place. Quite obviously, 50 lakhs he has lost out. Unfortunately, we did the transaction with Mr. B without any writing. We do not have any legal document to prove that we had sold the goods to Mr. B, because he had been paying the money regularly. So we trusted him, but we found that our trust was misplaced, and he dissed us by a very, very heavy amount, isn't it? So you can see the problem. Sometimes what happens when we show trust, especially in business where the rule is never ever show trust unnecessarily, especially if the amount happens to be quite big. So that is the problem, and that is the what we call price Mr. A had to pay for the trust which he bestowed upon Mr. B. So A has lost out 50 lakh. He cannot, what we call, even go to court to claim the money 50 lakh because he is not having any legal document. So this is the problem which may arise if we will not, what we call, have any legal documentary evidence to prove our stakes. Had there been a legal document available with Mr. A, whereby, let us say, Mr. B had signed that he had received goods of rupees 50 lakhs and he is supposed to pay us 50 lakh, then we could have easily gone to the court to stake our claims, correct? And the legal machinery would have no doubt left no stone unturned in recovering the money. But that is unfortunately is not the case here, and A is left up with nothing but to rue his destiny. So this was the case I brought to your notice just to tell the significance of bill of exchange. So most of the time in trading circles we find, especially with respect to the credit transactions, traders resort to bills of exchange just to escape such a situation which A faced. Are you getting my point or not? So bill is nothing but it is a sort of documentary evidence whereby the purchaser of the goods, correct, will undertake a promise and he will give us a signed document that he has received so much value of the goods and he is supposed to pay us this much of amount. So that legal document is a sort of what we call evidence available with us in case if what we call purchaser would default, then we can stake our claims, isn't it or not? So that is the situation all over here. So in order to make you understand the concept of bill of exchange, I took a background story. So I hope you got a fair bit of idea now. Now let us say Mr. A next time has become alerted. Next transaction he did with a trader, correct? Let us say he sold goods to a trader. You need not require to write anything at this particular moment. So after having been dished with a heavy amount, quite obviously now Mr. A is going to play with lot of caution. He cannot what we call simply trust any fellow anymore. So let us say when he did the next transaction with a trader, and next transaction is sale of goods. Let us say this time he is selling the goods to the traders worth rupees 5 lakhs, only 5 lakhs, correct? And this transaction is being incurred, or this transaction is taking place, we presume, on 1/1/21. This transaction is on credit, correct? Sale of goods. Now trader says, well, I am not in a position to pay you right now, please give me some credit. Quite obviously in business circle, without credit transaction, it is very hard to carry on the business. So sellers are supposed to give credit to the purchaser. Mr. A is the seller, don't let it escape out of your memory. So it's a credit transaction, I need not require to write, but still I am writing, it's a credit transaction, correct? And let us say we gave him a credit of 3 months. But we simply cannot trust anymore onwards. Trader says, well, I will pay you after 3 months. We say, no. We are not going to actually have any trust mere on the words. We want you to sign this piece of paper. Then Mr. A prepares a document, and the document is like this. See here. Document is like this. Just to make you understand and give you a fair bit of idea, correct? Now Mr. A writes, see here, 3 months, 3 months, he is writing on this piece of paper, Mr. A, not myself. Mr. A is preparing a document now. On the paper he writes 3 months, after date, on the right hand side corner he will mention the date, that is, let us say 1st of January 21, correct? 3 months after the date means after this date, pay to me to me or my order, or my order. Pay my order the sum of rupees, sum of rupees, how much? 5 lakhs. 5 lakhs. He will prepare a document like this, correct? Comma, for value receipt. For value receipt means for this much of value which you received from us. Value receipt. So, Mr. A this time is taking every step with great caution, great care. He is merely not going to bank upon the words. Now, after writing all these things, now what he will do, correct? He will sign, let us say trader signs. He will sign, put up his signature, write his name, let us say A. He will write his address, whatever address is there. He will put up a stamp paper here. A stamp paper will also be affixed, correct? A stamp paper will also be affixed. And now what he will do? He will give this paper, this document, this piece of slip to Mr. Trader and will ask the trader, please sign here. Now trader signs and trader will of course put up his address. This piece of paper or document is nothing but your bill of exchange. This is your bill of exchange. We have prepared the bill, correct? Logically in practical life what happens? The seller, the person who is supposed, he could be a seller, he could be a creditor. Suppose if I have given you a loan of rupees 50,000, even in that case, I am your creditor because I am supposed to receive the money, correct? So generally bill of exchange or generally bills receivable is prepared by the creditor or seller, or simply put, the person who is supposed to receive the money. So in this case, let us say I am Mr. A, I am supposed to receive the money, let us say from you, and you are the trader, correct? I sold you goods worth rupees 5 lakh and I told you that I am going to play very safe. I am simply not going to actually trust anymore merely on the words. I am going to have some legal documents with me in case if default would arise, so that at least I can initiate legal actions to recover my money. So I prepared a document like this. I will send this document to you and you are going to put up your signature. When you will put up your signature, in the business language we will call it this particular document or bill of exchange has been accepted. So once it is accepted because you have signed it, now I have the legal evidence that this person has accepted this promise, correct? So I'm asking you now, please have a look over these wordings. What I am saying in this document, 3 months, that means after this date, 3 months after this date, you are to pay me. I am telling you that you are supposed to pay me rupees 5 lakh or you pay to my order. It is not necessary that I would ask you to pay me. I can direct you, I can order you to pay this amount of 5 lakh to Mr. C, to Mr. D, to my wife, to my son. I can name anyone. That is what we mean by my order. That means the drawer of the bill has the option, has the power, has the authority to direct the what we call client or the trader to pay the money either to the what we call seller himself or to the person who he wished to. Is it clear to you or not? And you are supposed to follow that direction. So this is bill of exchange. Is it clear to you? If you have noticed in this bill of exchange what you have found, we can now surmise this way that bill of exchange, it is an instrument in writing. We can say, isn't it or not? Bill of exchange is, we can say, an instrument in writing, an instrument in writing. It can be said, isn't it or not? It is an instrument in writing. It contains unconditional order. It contains unconditional order. It contains unconditional order. What does it mean? Unconditional order. It means whatever I am saying, you will have to follow. You cannot put up any condition. For example, in this case, trader cannot say, I will not pay to Mr. C. I will pay to you only. It is not possible. He cannot put up any conditions. Or he simply cannot, what we call, put up any condition that if I will have the money, then only I will pay. It is an unconditional order without any condition, correct? It is signed by the drawer. It is signed by the drawer. Drawer, we will see later on, generally is the person who is supposed to receive the money, and generally he happens to be seller or what we call creditor, correct? It is drawn on a specific person. It is drawn upon a specific person. It is drawn upon a specific person. Drawn upon a specific person. For example, I have sold the goods to Mr. let us say T, trader. So I can draw the bill only on trader. I cannot draw this particular bill upon what we call somebody else. So it is drawn upon a specific person, means the particular person to whom you have sold the goods or to whom you have lent out some money. Is it clear to you? This writing document, what it is a sort of an order. It is an order, or should we write, there is an order, there is an order, there is an order to pay a specific sum, या pay a sum of money. Isn't it or not? There is an order that you are supposed to pay me this much of amount. It is very important that that date must be clearly written over there. It must be dated. It must be dated. It must be dated. Is it clear to you or not? What else? It must be stamped. Otherwise, law will not accept it. It must be stamped. Some must be certain. So these are some features. Now I hope you got a fair bit of idea regarding what we call bill of exchange. Is it clear to you or not? After having a look over this, now just pay attention. Once again, I am putting up that transaction over here. Transaction was A was seller, and on 1/1/21 or 20th, whatever date we picked up, 21. On 1/1/21, A sold goods to trader. Now I am using the word T, correct? So we have already seen that in this case, Mr. A will be termed as drawer of the bill. Mr. A will be termed as drawer. Generally, drawer is the person who is supposed to receive the money on account of sale of goods or on account of the fact that he might have given you some money as loan. So he could be a seller, he could be a what we call drawer, correct? And to whom this bill is being sent and who accepts the bill is known as drawee, is known as drawee. D-R-A-W-E-E, drawee. Is it clear to you or not? Since bill is being prepared by Mr. A, he is also known as maker of the bill. He is known as maker of the bill. Maker of the bill. You got my point or not? He is known as maker of the bill. Now, let us say we receive the bill. Let us say A signs the bill and we receive the bill on 1/1/21. So quite obviously, another point comes to my mind then is with respect to maturity date. This is a very important part. First of all, you must understand that maturity date and due date of bill are one and same thing. Many students confuse over this particular aspect I have seen. So I am clearing this doubt that maturity date and due date of bill are one and same thing. Is it clear to you? So it is important for you to learn the art of computing maturity date or due date of bill. Now how to compute? Suppose date of bill, suppose Mr. A draws a bill. Date of bill means the date on which bill is drawn. Let us say date of bill is 1/1/21. Generally, when bill is drawn, a time period will be mentioned over there. That is known as tenure. That is known as tenure. Tenure means time period. Let us say tenure of the bill is 3 months. Generally, it is 3 months. It could be 2 months, 4 months, 5 months, correct? Depending upon the what we call agreement. Say Mr. A draws a bill on Mr. T on 1/1/2021 at 3 months. Then how to compute the due date of bill? In order to compute the due date of bill, see here, we will write 1/1/21, the date of bill first of all. We will add the tenure. Tenure is 3 months. Logically, it is known as 1/4/21. So this logically becomes the maturity date or due date. You might be wondering, no, sir, it is not the maturity date or due date. No. This is actually your maturity date or due date. However, 3 grace days, grace means extra days, are added to this date. So logically maturity date is this, but we will add 3 grace days. 3 grace days must be added. So our effective maturity date will be, or effective due date will be 4/4/21. So on this particular date, the drawee is supposed to honor the promise. Drawee is supposed to pay the money to the holder of the bill. Why I am saying holder of the bill? Why I am not saying Mr. A? Because on the maturity date, this bill could be with anybody. This bill could be with anybody. What I mean by could be with anybody. See here. On the maturity date, it is not necessary that bill is in the hands of Mr. A, the drawer. It could be with Mr. A. It could be with bank. It could be with somebody else. So generally it is known as options of drawer. Options of drawer. Options of drawer. As we know, drawer has many options. Once he received the signed bill, correct, technically it is known as acceptance given by drawee. So once he receives the bill, then drawer has many options. First option is that Drawer retains the money till the maturity date. Drawer retains the bill till the maturity date. Till the maturity date. Effective maturity date. Whenever we will write maturity date, it would mean effective maturity date. So, one point is that after receiving the bill on 1/1/21, now drawer will keep the bill in his pocket till 4th of April 21. For 3 months period he will have to wait. Then on the maturity date, drawer will take the bill to the drawee, return his bill and take back his money. This is one option. Option 2. Drawer may get bill discounted. Drawer, that is known as discounting of bill. Drawer may get bill discounted. Bill discounted. Drawer may get bill discounted. What does it mean? We are keeping the same case. I have already told you bill has been received on 1/4/21. Correct? Bill has been received on this particular date and we have already computed the maturity date, that is 4th of April 21. Important thing is that drawee don't have any option. After signing the bill, drawee shall have no option. His obligation is that whosoever will bring the bill on 4th of April 21 and produces that bill to drawee will simply give the cash to that fellow. I just a moment told you, on the maturity date, either the drawer will approach him or bank would approach him. How? On 1/4/21 we received the bill. Mr. A received the bill from the trader. Correct? So one option is that I should wait for the next 3 months and let the 3 months time period elapse by, and after that I will have the money. So generally in business circle where ready cash is the need of the hour, traders do not find it worthy to wait for such a long period of time. So generally sometime options available with what we call drawer is that after receiving the bill, immediately they get it discounted. It is not necessary that on the same date they may get discount. They may get a discount, let us say after 1 month, after 2 months. But for simplicity's sake, let us say day on which Mr. A receives the signed bill, he immediately goes to his own bank account. Let us say account of Mr. A is in Punjab National Bank, PNB. Mr. A approaches his bank with the bill, gives the bill to the bank. We presume that bill amount is rupees 5 lakh. This is bill amount. Mr. A gives the bill to the bank, correct, and asks the bank to encash it. That means Mr. A telling to the bank that please take this bill of 5 lakh and give me rupees 5 lakh in cash. Now bank will tell why we should give you 5 lakh, because if we will give you 5 lakh, then we shall have to wait for the next 3 months to get 5 lakh back, because now bill has reached in the hands of the bank, and on the maturity date bank will now approach what we call drawee, and drawee will have to pay to the bank rupees 5 lakh. But the point is that bank will have to wait for the 3 months. So bank will say why we should give you 5 lakh immediately, because we are going to recover it after what we call almost 3 months time. So then drawer will tell to the bank, okay, for this much of delay, for this much of wait, you charge something. Then bank would say, okay, fine, we are going to charge. So let us say bank says we are going to charge 10,000. So bank will charge 10,000 and give 4,90,000 to Mr. A. But point is that Mr. A will receive the money much before the due date. In fact, in this case, because we are presuming on the same date he is discounting, so he is receiving the money almost 3 months prior to the maturity date. But the bank will have to wait for 3 months, so that is why bank will charge something. From the perspective of the bank, this 10,000 is an income, but it is known as discounting charges. This 10,000 is known as discounting charges. And Mr. A, as I said, will receive only 4,90,000, but on the maturity date, bank will receive 5 lakh. So you can say that by discounting the bill, A has lost out 10,000, but he got the money much before the maturity date. However, bank will have to wait for 3 months, but bank will, during this 3 months, bank, it would be presumed, now has earned an income of 10,000. So this is the second option. Mr. A has transferred the bill to Punjab National Bank. It means bills are negotiable instrument. Negotiable means you can negotiate it, you can transfer it. That means you are transferring the right to receive to somebody else. Actually, it was your right to receive 5 lakh from Troy. When I say you are transferring the bill, indirectly it means you are transferring all the rights of yours to the bank now. So your right of receiving has now been transferred to bank. Now bank has a right to receive 5 lakhs. So that is why bills are also known as negotiable instruments. Is it clear to you or not? So this is the second option. Now there is a third option also. What is the third option? Third option is drawer may endorse the bill. May endorse. Endorse means transfer. May endorse the bill to his creditor. To his creditor. To his creditor. Creditor is a person to whom we are supposed to pay. So this is yet another possibility. Mr. A received a bill from Mr. T. Mr. A received a bill from Mr. T on 1/1/21. One option is that I could have waited for next 3 months. That means I could have kept the bill with myself. Second option is that I can transfer this bill to bank and get the amount much earlier prior to the maturity date. Then there is a third option. I have to receive 5 lakh from Mr. T, and suppose I have to pay 5 lakh to one of my creditor. Let us say Mr. C is a person who is supposed to, or we presume Mr. A owes 5 lakh to Mr. C. A owes 5 lakh to Mr. C means Mr. C is creditor of A. A is supposed to pay Mr. C 5 lakh, let us say, due to some transaction. So instead of receiving 5 lakh from Mr. T and then paying that 5 lakh to Mr. C, what we can do? We can simply write in the, we can do two things. We can simply write in the what we call bill of exchange, pay to Mr. C rupees what we call 5 lakh. This is one option. Or we can, what we can do now, let us say once we have received the bill, as you know now bill of exchange is a negotiable instrument, we can simply what we call transfer this bill to Mr. C. Even in the previous case we transferred, but we transferred to bank. Here we are transferring it to Mr. C. Now Mr. C will be known as endorsee. Endorsee, I-N-D-O-R-S-E-E. Who is an endorsee? The person to whom BR has been transferred. BR has been transferred means your right to receive 5 lakh is now being transferred to Mr. C. So now on the maturity date, bill is in the hands of Mr. C. C is the holder of the bill on the maturity date, and now he will approach Mr. T on the maturity date, produce the bill, and T is supposed to pay rupees 5 lakh to Mr. C. In this case, when bill is transferred by Mr. A to C, Mr. A will be known as endorser. E-N-D-O-R-S-E-R, endorser. He is the endorser of the bill. Are you getting my point or not? There is a fourth option also. However, you can see under second and third options, some advantages are flowing to drawer. However, in the fourth option, there is no such advantage, but still there is some relaxation. Fourth option, drawer may send the bill for collection. Drawer may send bill to his bank for collection. For his collection or for collection. Mr. A received a bill from Mr. T. Bill has been received on 1/1/21. We are very busy businessmen, Mr. A. We are very busy person. Correct? We don't have the time for anything. So, generally businessmen of high profile, what they do, bills received by them from their clients, instead of keeping those bills by themselves, these business person, what they do, they simply give all the bills. Here they are not transferring, they are giving the bills to their bank. Generally bank provides such facilities, and they will ask the bank to collect the amount of these bills on respective maturity date. So now it is not possible for Mr. A, because he is a very business person, to keep track of what we call maturity date of all the bills. So he can simply transfer all those bills to the bank and will ask the bank to collect the amount of the bill on the respective maturity dates on his behalf. Bank generally provides such services, but bank provides such services only to businessmen of high profile. So bank will now collect the amount and will deposit that amount. After collecting that amount, bank will deposit that amount in the account of Mr. A. Mr. A must be having a bank account. He will provide the bill only to such bank where he is keeping an account. So after collecting the amount, bank will simply what we call debit the amount to his account. Is it clear to you? This way, Mr. A is getting a benefit in the sense that he will mentally more relaxed. He need not require to worry about the respective what we call maturity dates. He can what we call feel absolutely relaxed, but at the same time bank will definitely charge something for such services, which bank does. Is it clear to you or not? So after having a look over all these options, what we need to know further. Now you know the options, correct? In this particular chapter, we will have many more things to take care of. For example, we need to take care of in all these options when bill is honored and when bill is not honored. We will see later on that accounting aspects, but this particular point we shall discuss in detail later on. We will see that accounting aspects regarding bills of exchange depends upon two things. One, on the options available with the drawer, that is, he can retain the bill till the maturity, or he can discount, or he can endorse, or he can send it for collection. Accounting aspect will depend upon the options, and accounting aspects will also depend upon the fact whether bill is honored or dishonored. Whether bill is honored or dishonored. Because there is a possibility that on the maturity date, drawee may honor the promise, correct? When he will honor the promise, it is known as bill honored, bill realized, materialized, whatever you may like to say. It could also be a possibility that on the maturity date, the drawee may not pay, or he might not be in a position to pay. When he fails to meet his promise, that is known as dishonor. That is known as dishonor. So accounting aspects will depend upon all these things, but these things will be discussed later on. Correct? Of course in detail, because entire chapter will revolve around that. Is it clear to you or not? Second important point, because when we will see later on accounting aspects, time and again we need to compute the what we call effective maturity date. Just a moment ago I was talking about the calculation of the maturity date, but some finer points I just want to bring to your notice. See here, finer points. Let us say bill date is 1/1/21, correct? And let us say tenure is 3 months. We will add the tenure 3 months. We will reach 1/4/21. And as I said, 3 grace days shall have to be added. So this will become our effective maturity date. 4/4/21 is your maturity date. When we say maturity date, it always means what we call effective maturity date. 4/4/21. It could be a possibility that this maturity date might be a Sunday. It could be a possibility, very much a possibility, isn't it or not? So it could be possibility that maturity date might be a Sunday. It might be a gazetted holiday. It might be a gazetted holiday. It might be a public holiday. Public holiday. It might be a festival day. Generally, festival days are holidays. So, if your maturity date happens to be either Sunday or gazetted holiday or public holiday or what we call festival day, the Negotiable Act of 1881 actually says that preceding day will become the maturity date. Preceding date. That means instead of 4/4/21, now your maturity date will be considered at 3rd of April 21. Is it clear to you or not? This particular point you should be aware of. Besides, it could be a possibility that your maturity date is declared as an emergency holiday. Emergency holiday. Let us say on this date some riots take place, some dharnas takes place, let us say war breaks out. So an emergency holiday could be declared. If emergency holiday is declared, then law states that next day, in this case preceding day, in this case next day will be your maturity date. So if it happens to be an emergency holiday, then your maturity date instead of 4/4/21 will be considered as 5/4/21. I hope you got this particular point. Is it clear to you? However, during the questions, we shall not need the concept which I am going to just have a look over right now, but still you should be aware of it. Some people ignore this fact that bills might be at date or at sight. I have seen students never do this. Bills, when prepared, could be at date or bills at sight, bills at sight. However, if nothing is mentioned, always presume bills are at date. Correct? 99.99% bills are always at date. However, it could be a possibility that drawer might have written that this bill is at sight. It could also be a rare possibility, but it is a possibility. So you should be aware of these wordings, because in these wordings our due date could change. For example, let us say bill date is 1/1/21. This is bill date. That means on this date bill has been drawn, and bill is at 3 months. Now suppose this bill is at date, and honestly speaking, if nothing is mentioned, we always presume that bill is at date. So if bill is at date, no problem. We will compute the maturity date like this. We will write the date of bill. We will simply add the tenure, that is 3 months. We will reach 1st of April 21, and we will write the grace days, 3 days, and we will reach the effective maturity date, that is 4th of April 21. This is your effective due date or maturity date, provided bill is at date. Now we take the case of at sight. We take the same example. Bill date 1/1/21 at 3 months. Okay, let me write bill date. You should not get confused. Bill date 1/1/21. Tenure at 3 months. But see here, 3 months after sight. Three months after sight. Let us say bill accepted on 4/1/21. You see the difference here. Are you watching the difference? In this case, we send the bill date, we drew the bill on this date, but it is accepted on this date, and bill is at sight. If bill is at sight, it means you will take the date of acceptance as the starting date instead of bill date. So date of acceptance 4/1/21, instead of 1/1/21, you will start with 4/1/21. Then rest of the procedure will remain same. You will add 3 months. You will reach 4/4/21, and then you are going to add 3 grace days. So in this case, your effective maturity date will be 7/4/21. Point here is that if bill is at date, it means we are going to add tenure to the bill date. If bill is at sight, then we are going to add tenure to the accepted date. Accepted date means it is presumed that on that date, drawee is citing the bills. He is seeing the bill on this particular date. Is it clear to you or not? So that difference you should be aware of. However, in the question never states, to be very honest with you, whether it is at sight or at date. But if nothing is mentioned, I always told you will follow this methodology. However, in rare cases, suppose question states that bill is at sight, you should be aware of it. Is it clear to you or not? So these are the things in the bill of exchange which we are supposed to do. But besides that, there are some concepts which will take in great details. For example, dishonor of bill, I have already told you, then retirement of bill, then rebate on bill. Correct? So all these concepts, and very significant concept, accommodation of bills, from where you can definitely expect a question. All these things will be taken care of later on at great length, no doubt about that. But this is just a bird's eye view to you, so that you can grab the what we call intricacies of this particular chapter. Correct? Before we move further, last point. Many people confuse us with respect to BR and promissory note. Sorry, bill of exchange. First of all, bill of exchange from the point of view of maker is known as BR, and the person who accepts it is known as bills payable, as we know. BR or bill of exchange, correct, is generally prepared by the drawer, whereas promissory note, PN, Remember one thing, even promissory note, from the viewpoint of the person who is supposed to receive is BR, and from the what we call person who is supposed to pay it is a BP. No doubt about that. But the difference is that accounting will remain same. But the difference is that in case of bills receivable, it is the drawer, it is the seller who prepares the bill. Sometimes purchaser of the bill, he himself gives a written promise. He makes the bill. Are you getting the difference? So generally, such persons are very honest people. The moment they purchase the goods, they by themselves draw a bill, okay, and where they are going to write that we have received the value of the goods and we promise to pay to the holder of this bill so much of amount. That means they are undertaking a promise by themselves to pay to the drawer. That is the difference. Bills receivable is prepared by the drawer. Generally, promissory note is prepared by the person who is supposed to pay the money. Generally, he happens to be a debtor, as I said, or drawee, as I said earlier. So that is the basic difference between this. Nothing more to add in this particular session. So in this particular session, we are going to dwell upon the accounting part as far as bills of exchange is concerned. So accounting for bills of exchange. This is the topic. Now we are picking up. So if you are ready, we on our side are absolutely ready. So we are starting now, correct? Accounting for bills of exchange, right along with me. Accounting for bills of exchange, B/E. Just a moment ago, I did tell accounting depends upon actually two parameters. To be very honest with you, as far as this particular topic is concerned, accounting will depend upon two parameters, as I said. One parameter is on the options available with the drawer. On the options available with the drawer. That is one part of the game. Available with the drawer. As you know, drawer has many options. He can keep the bill till the date of maturity, or he can simply discount to have ready cash quickly. He can also endorse the bill. He can send the bill for collection. So these are the options which are available with the drawer, as I said. Besides, accounting will also depend upon whether bills are honored on the date of maturity or not. Correct? Whether bills are honored or dishonored. Honored or dishonored. On the date of maturity, bill might be honored, might not be honored. So, these are the what we call basis upon which accounting for bills of exchange will depend. So, first of all, remember one thing. We are trying to analyze the accounting when bills are honored, correct? So, when bills are honored. In all the cases, we are presuming that on the date of maturity, bills have been honored. When bill of exchange are honored. So first we are picking up the cases related to when bills are honored, correct? So now we are picking up case A. As far as accounting is concerned, case A. When the first option, as you know, drawer can keep the bill or retain the bill till the date of maturity. When bill is retained by the drawer till the date of maturity. By the drawer till the date of maturity. till the date of maturity. Till the date of maturity. Now this case means bill has been retained by the drawer till the date of maturity with himself, and bill is also honored. That is what we meant here by when bills are honored. Under all the cases which we are going to analyze, we are presuming that on the date of maturity, bills have been what we call honored. So in order to understand this particular case, we are going to directly one question to understand that. In fact, these questions initially have been what we call framed to comprehend the what we call these cases. So here we go and pick up these cases. Of course, we are going to unfold the new revised notes, correct? When you will open the section bills of exchange, you click upon it. In front of you, you will have two things, lectures and resources. Click the resources column, you'll find the new notes over there and you can easily download them. I did tell about that even in the last session. So just to remind the same, I am once again telling you, correct? So because often I've seen a student actually have trouble with respect to what we call downloading, so you should not have any problem in this case now. This is the question, case problem 1, simple question. On 1st of January 2020, F1 sells goods to F2 for 1,50,000. On the same date, F1 draws a bill on F2 for 1,50,000 on the same date, which is due after 3 months. Now this is the line you have to keep in your mind. This is known as tenure of bill, correct? And F2 accepts the bill, returns it to F1. It means F2 has signed the bill and has returned it to the drawer F1. F2 retains the bill till the due date. Now this is the case, F2 retains the bill till the due date. That means till the due date of maturity, bill has been kept by the drawer with himself. And F2 meets the bill on due date, and drawee party meets the bill on due date, means bill has been honored. Now question asks us to pass entries and of course prepare the ledger accounts. Generally ledger accounts are not asked in the examination, and in spite of that actually we will practice. So in order to solve case problem 1, so case problem 1 we are picking up first, case problem 1. Correct? So in this case, as you know, F1 has sold the goods. So F1 is the party which is drawer party. So first of all, we'll write journal entries in the books of F1, that is drawer. Journal entries in the books of F1. Now remember one thing, the F1 is the party who has drawn the bill, known as drawer. So the first entry of course will be with respect to the sale of goods. This is the entry. First of all, we need to write the date. The date, just hold on for a while, sorry for this botheration. extremely sorry. Actually, it was an urgent call. I need to pick it up. I tried to block, but unfortunately, sometime you are bounded by what we call etiquettes. So here we go, journal entries in the books of F1. So on 1st of January, goods have been sold. So this is the date you are going to write under the date column. You better prepare a proper journal, correct? So to whom we have sold the goods? We have sold the goods to F2. So you write F2 account, or you can write in bracket drawee account, correct? F2 is the person to whom you have sold the goods. He is your debtor. F2 account debit. You have sold the goods to sales account. You are going to write to sales. For how much you have sold the goods? So we have sold the goods for 1,50,000. So you write here 1,50,000, correct? So you have sold the goods for 1,50,000. This is the entry for sale of goods, correct? Sale of goods recorded. So sale of goods, just wait. Sometimes this paper gives a little bit of problem. Let me adjust this pages. Sale of goods. So now everything is fine. Sale of goods, correct? When you sell the goods, correct, it is given that you have drawn a bill. That means this transaction is on credit. So in order to play safe, you drew a bill on that party. So you will write the same date, 1st January 2020. You have drawn a bill and other party has signed it. That means you sent the bill to him, that party signed and returned it to you. Now you are receiving a bill of exchange, that is BR for you. So BR account debit, you will write here BR account debit. I am using the short form. Bills receivable account debit. From whom you are receiving? You are receiving from F2. That means you have earned a promise now. It's a legal proof that you have to receive 1,50,000. 1,50,000, correct? BR received. Now you will have to wait till the maturity date. What will be your maturity date, correct? You have drawn the bill on 1st of January. So you will add 3 months. You will reach 1st of March 2020. You will add 3 days of grace. So your maturity date will be 4th of April, because you are going to add 3 months. It will be April 20. Are you getting my point or not? This will be your maturity date, 4th of April 2020. On that date, you will return the bill to F2 and you will receive the cash, and it is given in the question, bill has been honored. And moreover, we have already told you that in all the questions we are presuming that bills have been honored, because we are picking up the cases when bills are honored. Bank account debit or cash account debit, if you want to write, you can also write cash account. So you are receiving cash against your bill, so you will return the bill to F2. So simple entries, 1,50,000. 3 entries you are going to pass here. So you will write here bill matured or honored. Bill honored. Bill honored means you have received the amount of bill. This is the entry. In fact, these are the entries which you are going to pass in the books of drawer. Although ledgers are not needed, but just to make you a little bit more what we call proficient, I am making the ledgers in the books of drawer. You can see first entry is affecting 2 accounts, F2 account, that is drawee account, and the sales account. So you draw F2 account and sales account. In the F2 account, correct, you write here 2 sales. You have written here 2 sales. That is 1,50,000. You will have to draw a sales account now, because in the first entry sales accounting getting a credit, you will write here by F2. Sales account is getting credited because of F2. You are going to put the amount towards the credit side, that is 1,50,000. Isn't it or not? Yes, sir. Besides that, second entry you can see is affecting BR account and F2 account. F2 account has already been prepared. So we are going to prepare now BR account. Correct? Clear? BR account is getting a debit. So towards the debit side, we move over to and we write here to F2. Amount will be, of course, 1,50,000. And towards the credit side of F2 now, we shall write by BR account. By BR account, that is 1,50,000. This is how ledgers will be prepared. Not a very tough task. Just for practice sake, is the first question. Then last entry happens to be bank account debit to BR account. So we shall prepare a bank account. BR account is already with us. Bank cash account, whatever you may like to write. So in the bank cash account towards the debit side, you are going to write to BR account, that is 1,50,000. 1,50,000. Correct? And in the BR account, we shall write here by bank. By bank. By bank is 1,50,000. This is how ledger's account will be prepared. As you can see, because your bills receivable has been received, you can see there is no balance in it now. Because you have received a cash of 1,50,000, your cash account is showing a balance carried down of 1,50,000. This is balancing figure. Correct? This is balancing figure. And sales, although at this moment I am writing two balance carried down, but ultimately these will be transferred to your trading and profit and loss account. Total sales are transferred to trading account, of course, but at this moment we shall write two balance carried down, showing that we have incurred a sales of 1,50,000. And account of F2 will not reflect any balance because whatever we were supposed to receive from him, we have received. Correct? So this is how the ledger accounts are prepared, and that is the logic of preparing what we call these accounts. Now we shall write the entries in the books of what we call other party, that is DROI. So we shall write here entries in the books of F2, sorry. Entries in the books of F2. F2 is the party upon whom bill has been drawn. It's known as DROI. Correct? Now presume yourself as the DROI. You have purchased the goods. Correct? You have purchased the goods on 1st of January 2020. So your entry will be purchases account debit. And from whom you have purchased? You have purchased from F1. F1 is your creditor. Correct? You are supposed to pay to F1 rupees 1,50,000. This is the entry for purchase of goods on credit, of course. You will write here goods purchase. The narration should be crisp, short, brief, concise. Goods purchase. It is not necessary to use this words being or for, but if you are habitual to it, you have complete liberty to use those words. Correct? So after purchasing the goods, because other party drew a bill upon you and you accepted it, signed it, correct? When you are signing it, that means you are sending the bill to the drawer. That means your creditor is F1, so you are sending the bill. Of course, date will be, okay, I will write date here, 1/1/2020 on the same date, F1 account debit to bill of exchange. That is bills payable for you. Correct? So you have accepted the fact that you have taken 1 lakh, you are supposed to pay 1,50,000 to F1. It's a Written instrument, written promise, legal promise. Now you cannot escape of it. Bills payable accepted, or simply bills accepted. So acceptance is given now. So now you will also wait till the date of the maturity, and we have seen the date of maturity is 4th of April 2020. On that date, the party, this time drawer himself, will come to you with the bill. Bill will come back to you and you will have to pay the cash. Cash will move out of your pocket. So your bills payable is coming back to you. You will debit bills payable account debit, and you will write here to cash. Cash will move out. So your entry will be like this: bills payable account debit to cash account, and 1,50,000, of course. So you have honored the bill. Correct? Bills payable honored. Honored means you have made the payment. So this is how the entries will be done as far as this particular case is concerned. Now we pick up yet another question of this particular category itself. Correct? Question number, illustration 2 now, or case study 2. In this case study, you can see it is written on 1st of January 2020. K2 purchased goods from K1. This time, K2 is the purchaser who purchased the goods from K1 for 10,000. And the moment he purchased the goods, he himself gave a promise. So when the party who is supposed to pay, when that party himself actually gives a promise in writing, that is nothing but bills. Instead of bills receivable, we call it promissory note. Correct? In case of bills receivable, it is the drawer actually who frames the bill and asks the drawee to sign it. But here, in this case, the drawee himself is giving in writing that we will pay you after so and so date. On 1st of January 2020, as we can see, K2 purchased goods from K1 for rupees 10,000 and immediately drew a promissory note. So you should not get confused by this wording promissory note. The treatment will remain same. Only thing is that promissory note is what we call made by drawee. In favor of K1, payable after 3 months on the date of maturity of the promissory note, the Government of India declared a holiday under the Negotiable Instrument Act of 1881. So this time, as we can see, first of all, we will calculate the maturity date in the usual manner. But because on that day, a public holiday has been declared by the government, correct? So, Government India declared a holiday under, actually Government of India declared a holiday on. So we shall presume that in this case, what we call the next day, if we will consider it as an emergency day, because Government of India declared, there was no gazetted holiday. So we will move a day further in this case. Is it clear to you or not? So emergency holiday we shall presume it is, because it is given that Government of India declared a holiday. So we will consider it as an emergency day. So in case of emergency day, your date of maturity will be 1 day later. That means the next day will become the maturity date. We will analyze the question here. Case is problem 2. Case problem 2. Case problem 2 here. K2 has purchased the goods from K1. Remember one thing, just I am analyzing the question. This time K1 is the drawer and K2 is the purchasing party, that is drawee. Correct? K2 is the purchasing party, he is the drawer, he is the drawee. K2 purchased the goods, he has purchased the goods, and he himself drew a bill. He himself drew a bill. Correct? And he wrote that we have purchased the goods from you and we are going to pay you this amount after so much of time. So this time it will be a promissory note. Is it clear to you? So first of all, we will calculate the due date. So due date we will calculate. How to calculate the maturity date or due date in this case? First of all, note down the initial date. Date of transaction or date of drawing of bill is actually 1/1/2020. 1st of January 2020. Tenure is 3 months, so we will write here 3 months. So ultimately we reach 1/4/2020. We add 3 days of grace. We will reach 4th of April. Logically, this should have been the maturity date. But because an emergency holiday has been declared, because of emergency holiday, we shall add one more day and we will move over to the next day, which will become what we call our maturity date in this case because of emergency holiday. However, as I did tell in the initial class, that if maturity date happens to be Sunday, gazetted holiday or something like that, in that case, preceding day will be the maturity date. Correct? Rest of the question is on similar lines. So first of all, we'll pass the entry in the books of K2. In fact, so first I write here the books of K1, books of K1. K1 is the drawer. He is the seller of the goods. Correct? He is seller, he is drawer. Correct? So he is received. First of all, you will write the entry for sale. In fact, your first entry will be on 1st of January 2020. You sold the goods to K2. You will write K2 account debit to sales account. Correct? And amount is rupees 10,000 in this case. Amount is 10,000. Sale of goods will be the narration. I have seen most of the students, they skip writing what we call narration, need to take care of this. Sale of goods. Once you will become habitual of writing narration, then it will look a little bit easy for you, because I find actually at this level, student level, sometime, even when we were of your age, we used to have what we call trouble in writing the narrations. Correct? Then, same date I will receive a bill from my angle, from drawer's angle. It will be bills receivable, no doubt about that. So we shall write bills receivable account debit. We are receiving it from K2. We shall write K2 10,000 rupees. We shall write here promissory note received. Promissory note received. After receiving the promissory note, all we have to do is to wait till the maturity date, as you know, and we will receive back our money. So maturity date we have seen looks 4th of April, but it will be 5th of April now. 5th of April 2020 will be considered our maturity date. On that date, now we will receive the cash. We will write here cash account, and we shall return what we call the promissory note. From our side, it will be considered as bills receivable. Remember one thing, to bills receivable, we will receive cash of rupees 10,000. We will return his bill 10,000, 10,000. Is it clear to you? So, promissory note honored. We will write here promissory note honored. So we have honored the promissory note now. Is it clear to you? As far as entries in the books of what we call K1 is concerned, over, we move over to the other party now, entries in the books of K2. In the books of K2. K2 is the party known as DROI. Correct? Presume yourself as you are the DROI, so you have purchased the goods. Then it becomes easier to analyze and write the entry. 1/1/2020, you purchase the goods, so you shall write the entry purchases account debit. From whom you are purchasing, you write the name of that party. So purchases account debit. You write here the name of the party. You are purchasing the goods from K1. Correct? You have purchased the goods for rupees 10,000, so you will write here 10,000. 10,000. Now, on the same date, first of all, you also write the narration, purchase of goods. Purchase of goods. purchase of goods. Now, on the same date, you have given a promise that you are going to pay the amount after 3 months. So, you will write here K1, the party. To this party, now you are giving a promise. You will write here 2, bills payable. You will write bills payable in BR, no doubt about that. But you will write here promissory note given. Promissory note sent or given to K1, worth rupees 10,000. Worth rupees 10,000. Then, on the maturity date, that is 5th of April 2020, you are going to get back your bills payable, but you will be responsible to pay the amount. Since bill has been honored, it will be presumed that you have made the payment. 10,000, 10,000. Correct? BP honored. This is the entry you are going to write here. You have honored the payment. Is it clear to you or not? Absolutely clear. So now, we pick up a question, one more question, just to actually equip you. The question still relates to this one, but I am equipping you with something new, correct? On first, this is case problem 3 now. On 1st of January 2019, as you can see, S1 sells goods for rupees 30,000 to S2. On 1st of January, goods have been sold. 50% of the payment made immediately by S2, on which S1 allowed a cash discount of 2%. When you made the payment of 50%, you also earned a cash discount of 2%, perhaps because of early payment. For the balance, S2 drew a promissory note in favor of S1. And so again, promissory note, that means drawee party is himself giving a promise that we are going to pay you. Promissory note in favor of S1, payable after 20 days. Payable after 20 days. Since the date of maturity of bill was public holiday, this time it is given public holiday. So one day preceding will become the what we call day of maturity. S1 presented the bill on the day as per provisions of Negotiable Instrument Act, which was met by S2, state the date on which the bill was presented by S1 for payment and generalize the above. Now, see here in this question, first of all, let me also analyze it for proper comprehension. First of all, you write along with me case problem 3. Case problem 3. Just to remind you, in this case, S1 is the drawer. He sells the goods. Goods worth rupees 30,000 have been sold. Goods worth rupees 30,000 have been sold to S2. S2 is our drawee party, correct? However, what S2 did, S2 made a payment of 50% immediately. 50% payment, 50% of 30,000. S2 made the payment immediately. But how much payment we are going to receive? 50% of 30,000 happens to be 15,000, but he got a discount of 2%. So we will subtract 2%. 2% will be equal to 300 if I am not wrong. So it means we shall receive 14,700. This payment is made immediately. That means on the date of sale itself. Besides, he drew a promissory note upon us. See, drew a promissory note upon us means S2 is giving a promise in writing by himself. We are not forcing him. He himself actually giving a promise that I will pay the balance after 20 days. So promissory note for balance. Promissory note for balance. Now he says that he will make the payment after 20 days. So we will compute the what we call in this case a date like this. First of all, how to compute that? So maturity date we will compute maturity date. In order to compute the maturity date, first of all write the date 1st of January 2020. Add 20 days plus 20 days. 20 days, remember your first column is days, second column is months, last column is years column. So when you add the days, you reach 21st of January 2020. Now you add 3 days of grace. When you add 3 days of grace, you reach 24th of January 2020. But 24th of January, question states, is a public holiday. This is a public holiday. Because it is a public holiday, it means your maturity date will be preceding date. So preceding date will be 23rd of January 2020. Is it clear to you or not? Is it clear? So now you will pass the entries. First you write books of S1 because S1 is the drawer, correct? Books of S1. In the books of S1, first of all, on 1st of January 2019, sorry, date I wrote 20, actually it is 19, no problem. I will rectify it. It is 1st January 2019. However, it will not make much difference. Correct? So 1st of January, we sold the goods. We sold the goods to S2. So we will write S2 account debit to sales account. Goods sold worth rupees 30,000. So we shall write here 30,000. Correct? Sale of goods. This will be the narration. Sale of goods. Clear? Right. Then, on the same date, 1st of January 2019, we are receiving a bill, BR account debit. You can also write promissory note account debit, but practice is to write BR only. BR account debit to S1, you are receiving it, sorry, from S2. For the rest, that means 15,000 he made the payment in cash, and for 15,000 he has given you a bill. Correct? So bill received or promissory note received. On the same date you received 50% payment, you will write here cash account debit. As I told you, you will not receive 15,000 because you gave a discount of 2% too. So 14,700 you will receive. 300 is your discount, normal discount. This discount means cash discount. Cash discount means discount given to make the other party make the payment earlier or promptly. Cash discount is 2% of 15,300. To S2, you are receiving the payment from S2, 15,000. 50% payment received. And discount allowed is 2%, no doubt. If you want to write in the narration, you can also write in the narration. Correct? Now you will move over to the maturity date, which we calculated 23/1/2019. On this date, you will receive the payment. Once again, you will write cash account debit. and you will write here to what we call BR account. Your BR account will move out. You will return the bill and you will receive the balance 15,000. Bill honored. Bill is honored, that is why you are receiving the payment. Correct? This is how you are going to put up the entries. Books of S2 if you wish to. Books of S2. 1st of January 2019. First entry, purchases account debit. Purchases account debit. You are purchasing the goods from S1. 30,000. On the same date, what you did? S1 account debit. You made a cash payment. You will write here to cash. But you made a payment of 14,700 against a payment of 15,000. It means you received a discount of 300. So you will credit discount, it's a gain for you. Gain for you means gain for S2. You can write discount received also. This entry is for purchase of goods. Purchase of goods. And this entry is for payment of 50%. Payment of 50% against 2% discount. Now, you on the same date, you are making a payment, so you are giving a promise. You will write here S1 account debit to bills payable account. You will write here 15,000. Correct? Promissory note sent. For the balance, you sent a promissory note. Promissory note sent. And on the date of maturity now, one more entry you will have to write. Maturity date is 23rd of January 2019. Correct? You shall write here, you are making, your bills payable will come back to you. You will debit bills payable account. You will make the payment. Payment is worth rupees 15,000. So bills payable honored. Bills payable honored. This will be the entry, narration, which you will write. So, this is the first case which we have analyzed. So, welcome again. So, we are discussing the accounting aspects now. We took the case number 1 when bill has been retained till the what we call maturity. Now, second case is there, of course, which each one of you are already very well aware of. So, we are picking up the second case, case B. When bill is discounted by the drawer. When bill is discounted by the drawer. As I told you in the initial session itself, sometime drawer doesn't feel the need to keep the bill till the date of maturity. In fact, he needs the money quickly. So what he can do, he can simply go to his bank. He can get the bill encashed much before the maturity date, and On the maturity date now, the bank will go to the what we call drawee to get back the money. Bank will pay the money to the drawer much before the due date, no doubt about that. On the maturity date, the drawer is not going to pass any entries. We will try to actually analyze this case with the help of, this is case study 4. Now see again here, Mr. F sold goods to G for 10,000 on 15th of March 2020. On the same day, G accepted a bill drawn upon him by F at 4 months for rupees 10,000. X discounted the bill on 15th of April 2020 at 18% per annum at his bank, and bill was met on the maturity. Make journal entries in the books of what we call both the parties. So try to understand this particular point now, correct? In this case, what is the situation here? First, let me analyze here. This is case study 4, case problem 4. Case problem 4, correct? In this case, F is the party selling the goods, correct? He is the seller, will also be the drawer. He sells the goods to Mr. G. Goods were sold on 15th of March, correct? 15th of March and 2020. On this date, goods have been sold. Of course, the amount is worth rupees 10,000. On the same date, he receives a bill also. On the same date, BR is also received. On 15th March 2020, F receives the BR from, of course, Mr. G. Now we will compute the maturity date. Maturity date actually is 15th of March 20. Question has given in this case that for 4 months. So we will write here 4 months, correct? We will reach 15/7/2020. We will reach 15/7/2020. We will add 3 days of grace. So logically, it is 18/7/2020 is your maturity date in this case, correct? Now, see here. As you can see, bill is received on 15th of 3/2020. And after 4 months, this bill is due. After 4 months, this bill is due. If Mr. F will keep the bill with himself, he will have to keep the bill with himself at least for 4 months, and then only he will be able to realize his money back. So instead of waiting for such a prolonged period of time, Mr. F, what he did, he waited for 1 month, and on 15th, it is given that X discounted the bill on 15th of April. He did not discount the bill on this date itself. He discounted the bill 1 month later. So 1 month have gone by. After 1 month, that is on 15th of April 2020, he discount the bill. Mr. F might be feeling need of money, so he did not feel that it is better to wait for the next what we call 3 or 4 months. It is better to get the bill encashed. So what he did, he encashed the bill, known as discounting of bill. He discounted the bill from his bank. Remember one thing, bill can be discounted from only that bank where you have the account, correct? So he discounted means he discounted the bill from his bank. Discounted the bill from his bank. Now try to understand this point. When he discounted the bill, still 3 months time period is remaining. Still 3 months time period is remaining. Correct? Still 3 months time period is remaining. Still 3 months time period is remaining. That means now bank will have to wait for the next 3 months to get the money back from the what we call drawing. That means bank will have to wait for at least next 3 months. Are you getting my point or not? Sorry, actually in between phones are there. So bank will have to wait for the next 3 months. Bank will deliver the cash to us, but bank will tell why we should give you 10,000 when we are going to receive this 10,000 after 3 months. So obviously bank is going to charge some commission. That is from the bank's perspective known as discount charges. Correct? It is an income for the bank, no doubt. How those discount charges or income from the perspective of the bank will be computed? For the period for which bank will have to wait. Bank will have to wait for 3 months. So bank will charge some amount for these 3 month blockage of money. So how much bank will charge? 10,000 is your amount of bill. 10,000 was the amount? Right, 10,000 was the amount, correct? 10,000 is the amount. It is given to you that bank charged 18%. This 18% means if bank would have kept 10,000 for 3 months, bank would have had earned interest at the rate of 18%. So that interest bank will charge from you, because bank otherwise will lose what we call 3 months interest by giving you 10,000 now and getting 10,000 3 months later. So 10,000 into 18% into 3 months. Why I am writing 3 months? Because bank will have to wait for 3 months, so bank will charge 3 months of interest, but it is known as discount charges. When you will compute it, it will be near about 450. So it means your bill amount was 10,000, no doubt about that. Your bill amount is 10,000, but bank will charge 450 from you, and it means you will receive only 9,550 from bank, but at least you will get 9,550 quite early. That means 3 months earlier, because you have already waited for 1 month. On this date you are discounting the bill. On this date you are not getting 10,000, 9,550, but you are getting 3 months earlier. On the maturity date, you cannot pass any entry, because now bill is with the bank. That is why bills are known as negotiable instrument. They are easily negotiable from one hand to other. So now bill is with the bank, and on the maturity date, bank will go over to G and take back the money, because we are presuming in all these cases what we call bill are being honored. So it means G has paid to the bank on the maturity date, but you are not going to pass any entry on the date of maturity. Is it clear to you or not? So this is how we shall move about as far as this particular question is concerned. So first of all, books of course, we are going to take into account Mr. F, books of F. In the books of F, the first entry which we are going to pass will be 15th of March. What is the year? Year is 2020. First entry will be for sale of goods. You are selling the goods to G. G account debit to sales account. This will be your entry. Amount is 10,000. Correct? Now, on this date, same date, you are receiving the acceptance. First you write the narration, sale of goods. On the same date you are receiving bills receivable account debit to G account. You are receiving acceptance from G. BR accepted and received, or simply you can write BR received. Then you waited for the 1 month, and on 15th of April you got the bill discounted. 15/4/2020 will be the next date. On this date you got the bill discounted. When you got the bill discounted, don't write cash, because bank will credit the amount, because I have already told you, you can get the bill discounted only from that bank where you have the account. So bank will not immediately pay you cash, bank will credit the amount to your bank account. When here we are writing bank, it means this amount bank is crediting to your bank account. Is it clear to you? So bank account debit. How much bank will credit? We have already computed 9,550. Why? Because bank is going to charge something, so it is a loss to you. So you will debit discount charges or discounting charges. Discounting charges account debit. That is 450. And now your bill is moving out from your hand. This bill has reached in the hands of bank, correct? So you are writing to BR. Now this bill is not in your hand. Because bill is now not in your hand, first of all let me write here discounting or bill discounted. We have already calculated 450, that is 10,000 into 18% into 3 by 12, correct? Now your maturity date, which we computed earlier, was actually how much, which was your maturity date, 18/7/2020, no entry. You are not going to pass any entry on this date. It will be bank who will now, that will receive the amount on the maturity date. So you cannot pass entry on the maturity date now. You have already received the amount. This will be the entry in the books of F. Now in the books of G, we are going to pass the entry, books of G. In the books of G, on 15th of March 2020, we shall write the entry. Purchases account debit to G account. Purchases account debit to G account. As you can see, purchases are worth rupees 10,000. Purchase of goods. Purchase of goods. Correct? Then you will write the entry on 15th of March 2020 once again. Why? Because you are accepting the bill. You will write here, actually you purchase the goods from F, sorry. You will write here to F account debit to bills payable account. F account debit 10,000. 10,000. You write here bills payable accepted, or simply bills accepted. Accepted means you have signed and you have accepted that you are supposed to pay 10,000 after 3 months or 4 months, whatever is the tenure. You will not pass any entry on 15th of 4/2020 for discounting by drawer, because you are not connected with that part. Drawer has discounted the bill, so you are not concerned with that. So no entry on this date, no corresponding entry in this date. However, you will pass the entry on the maturity date, because on the maturity date you are responsible to pay to the party whosoever comes to you for what we call money. Correct? 18/7/2020. So bank will approach you on this particular date, bank will return your bills payable, and you will pay instead of F, you will pay to the bank, you will write here to cash. Are you getting my point or not? That means, as far as drawee is concerned, he is not going to be affected by all these cases. So this will be the entry which the drawee will pass in its books. Is it clear to you or not? I don't think it should give you any sort of what we call trouble as far as what we call discounting of bill is concerned. Correct? Well then, after going through this particular question, there is next one is when bill is endorsed. Correct? When bill is endorsed. This is case C. Now we are picking up case C. When bill is endorsed. When bill is endorsed, you know the meaning because we explained the meaning earlier in the session which we took, which happened to be the first session. So often actually drawer, what he does actually, he simply asks the drawee to pay the money to his own creditor. I will tell you with the help of an explanation. So we pick up for the same case problem 5. Case problem 5. I'm simply reading the question. F1 owed 78,000 to F2. It is given F1 owed 78,000 to F2. That means F2 is the party which is supposed to receive the money because F1 has a liability of 78,000 to pay F2 due to some or other reason. The reason is not given to us, but it is given that F1 owes 78,000 to F2. It means F2 is supposed to receive 78,000 rupees from F1. Correct? Technically, F2 will become the drawer. And he will be considered a drawee because it is written, first it is written F1 owed what we call 78,000 to F2. On 5th of March 2020, he accepted a bill for 75,000 for 1 month drawn by F2. So because F2 was supposed to receive the money from F1, F1 owed 78,000 means F1 is under an obligation to pay 78,000 to F2. He might have purchased some goods, he might have taken a loan. Whatever may be the possible reason, F1 was under an obligation to pay 78,000 to F2. So for the same, F2 actually drew a bill. Now it becomes all the more clear that F1 is the drawer. Correct? He draws a bill. So a bill receivable is drawn, which is accepted also. And he accepted a bill for 75,000 for one month. So bill amount is 75,000. Tenure is actually 1 month. 1 month. Very stylishly it is given. Actually, he owed 78,000. Remember one thing, F1 is supposed to pay 78,000 to F2, but bill is just for 75,000 in full settlement. In full settlement means drawee is getting a discount from F2. Drawee is F1. He is supposed to pay 78,000, but F2 told him, okay, you sign a bill of 75,000 and I will accept as if you have paid back 78,000. So in full settlement means by paying 75,000, account of 78,000 is settled. Correct? Now it is given F2 endorses the bill to his creditor F3. So in this case, after receiving the bill, F2 endorsed this bill to a person F3. So F2 now might have purchased some goods from F3 or might have taken some money from F3. So due to some or other reason, we do not know the reason, correct? But it means F2 must be under an obligation to pay F3. So what he does, correct, he endorses this bill to F3. He endorses the bill. I will write it here. He endorses the bill. F2 endorses the bill. Endorses means transfers the bill to F3 and to his creditor F3 immediately. So this bill has been now transferred to F3. So F3 is creditor of F2. Is it clear to you? And F2 is creditor of F1 because F2 is supposed to receive 78,000. F3 might have had to receive some amount from F2. So this bill of 75,000 he transferred to F3. That bill was duly met on the due date. So in this case, of course, F3 will be known as endorsee because now bill is transferred to F3. He is the endorsee. This drawer now will become endorser because after receiving the bill, he endorses the bill down. So he will be known as endorser of bill. To whom the bill has been endorsed will be known as endorsee, correct? So often such things happens in practical life. So now we shall write the entry in the books of F2 first, books of F2. F2 is the drawer, original drawer, correct? So 5th March, year is given 2020. 5th of March 2020, we received a bill. This time don't write any entry for sale because nothing is given in this question. So we are simply receiving a bills receivable from F1. But remember one thing, we were supposed to receive 78,000, but we are receiving only 75,000. So we are losing 3,000 because we are offering a discount. This is a sort of cash discount. 3,000, correct? We 3,000. Then we shall write here too. We are receiving this bill from F1, 78,000. BR received against settlement of 78,000. Against settlement of 78,000. That means you are offering a discount. Logically, before that, it is given that on the same date, bill is now endorsed. So on this date, March 5th itself, bill has been now endorsed. The bill which you received is now given to F3. F3 account debit, that is endorsee account debit. To BR account. So this 75,000 worth of bill is given to now F3. BR endorsed. Now because bill is not in your hand, you cannot pass the entry on the maturity date for receiving of any amount because this bill will now be presented to the drawee by F3 and not by drawer F2. So no entry on maturity date. Your maturity date should be actually 8th of April because tenure is 1 month. By adding 1 month to March, we reach April and 3 days of grace. So 8th April 20, no entry on maturity date because bill is not in our hand. Are you getting my point or not? So this is the entry which you are going to pass in the books of F2. Is it clear to you or not? Now we move over to what we call F1, books of F1. F1 is drawee party. On 5th of March, F1 gave a promise to you, correct? So you are F2. F1 was under an obligation to pay you 78,000, but he made a bill of 75,000 in full settlement. Two bills payable 75,000, which means he earned a discount from you to the extent of 3,000. You will write here to discount. Bills payable accepted. Against settlement of 78,000. Against settlement of 78,000. Correct? Obviously, when on the same date bill was endorsed, you cannot pass any entry. See, with the bill, drawer is having an option. So no corresponding entry against the endorsement of bill. It is up to drawer's whims and will. Whatever he want to actually do with the bill, he can do. You are concerned only with one fact, that on the date of the maturity, whomsoever will bring the bill to you, you will pay the amount to that fellow. Correct? So, now you will reach the maturity date, that is 8th of April 2020. Your bill will come back to you. You will write bills payable account debit, and you will simply deliver the cash to that party. Of course, it means this time you are delivering the cash not to F2 but to the endorsee, because on the date of maturity, endorsee will bring the bill to you. And you were supposed to pay 75,000, you paid. Bill honored. Logically, in this question, there are three parties involved. So now, if suppose I take the books of endorsee, that is F3, books of F3, correct? Earlier we took F2, these are books of F1. Now we are moving over to books of F3. F3 is the endorsee. On 5th of March, endorsee received a bill from you, BR account debit to F2 account. $75,000 worth of bill is received. BR received from F2. Now you will wait till the maturity date. You are the endorsee now, and on the date of maturity you will approach the drawee and get back the money. So when you will receive the money, you will write here cash, and you will have to return the bill to the drawee. Then only drawee will pay you 75,000. Correct? Bill matured or honored, whatever you may like to write. So this is how entries will be done in the books of drawer, drawee, and of course we have seen the case of endorsee now. Last two or three sessions or 4-5 sessions, I don't remember exactly how many sessions so far, but we were discussing the what we call accounting treatment, and three treatments we have seen. Of course, right now we are visualizing the various options when bill is honored, correct? So three options we have already gone through, and this is the This is the fourth option. The fourth option is, first of all, you need to know that first option happens to be when bill is retained, second when discounted, and third when endorsed. And now the fourth one, when bill is sent, when bill is sent for collection, when bill is sent for collection to the bank. So often drawer, what he does actually, he simply sends the bill to the bank and asks the bank to collect the bill on his behalf. And bank provides us services. Of course, bank will charge some commission for the same, but this is one of the services offered by bank. So their clients can, what we call, give their bills to the bank, and on the maturity date, bank will collect the bill on behalf of the client or the drawer in this case. To understand this particular concept, we pick up what we call case problem 6 now, and we have done so far fifth one, I think. So this is case study 6. Case study 6. What does the case study states? Case study states that on 1st of October 2020, X2 sells goods to Y2. In this case, on 1st of October 2020, X2 sells the goods to Y2. He sells to Y2 and sells goods for rupees 5 lakhs on this particular date. Correct? On the same date, Y accepted a bill drawn upon him by X2 at 2 months. So on this date, Y2 accepts the bill and sends it to what we call X2. Now X2 retains the bill till the maturity. Before we calculate the maturity date, tenure of the bill is 2 months. Tenure of the bill is 2 months. Which means their maturity date must be 1/10/2020. At 2 months, you will reach 1st of December 2020. You add 3 days of grace, so your maturity date will become 4th of December. Sorry. X2 retains the bill till the maturity date, and on the due date sends the bill to the banker. So on this date, bill is still held by X2, but on this date he sends the bill to the bank for collection, and in due course X2 receives the information from the bank that bill has been duly met. So bank has collected on behalf of X2. So entries not very tough, same entries almost. 1/10/2020. First of all, we shall write the entry in the books of X. Books of X2. Correct? X2 is the seller, he is the drawer, he sells the goods to Y2. First entry for sales, Y2 account debit to sales account. Correct? That is 5 lakhs. Sale of goods. Sale of goods. Then, on the same date, we received a bill, BR account debit to Y2 account. Bill amount is of course 5 lakh. So you shall write 5 lakhs. BR received. Then bill is sent for collection Bill is sent for collection on 4th of 12, 2020. Correct? So, when bill will be sent for collection, X2 will write the entry. In fact, he will open an account known as bills sent for collection account. Bill sent for collection account. It is considered as a personal account. Remember one thing, it is considered as a personal account. Correct? Bill sent for collection is a personal account. And you are sending your BR. So 5 lakh worth of bill now has been given to bank. So bill, in fact BR sent to bank for collection. For collection, correct? Next entry. Now bank will collect the amount. When bank will collect the amount, bank will write bank account debit. Actually, this bank account reflects the account of X2. Account of X2 which is in the bank, correct? So bank will receive the money and deposit the money in the bank account of X2. So bank account here means account of X2 in the bank. So 5 lakh rupees collected and deposited. Bank account debit to bills sent for collection. Amount received or bill collected, whatever you may like to write. Not very tough, simple, isn't it? Similarly, now Y2 will write the entries. Books of Y2. Y2 is the purchaser. On 1st of October 2020, he purchases goods. Purchases account debit. Purchases account debit. He purchases goods from X2. 5 lakh worth of goods have been purchased. Correct? Purchase of goods. Then on this date he accepts the bill. So entry will be X2 account debit. Accepts the bill, it means after signing the bill, he is returning the bill to X2. Bill accepted. Now, no corresponding entry will be done in the books of Y2 with respect to bill sent for collection by the drawer. When drawer will send the bill for collection, Y will not pass any entry against the same, isn't it or not? However, now on the maturity date, Y2 will pass the entry, that is 4th of December 2020. His bills payable will come back to him and to cash. That is 5 lakh, 5 lakhs. Correct? Bill honored. So these are the 4 options which are available with the drawer. And we have seen what we call entries with respect to these 4 options when bill is honored on the due date. But there is every possibility that bill might not be honored. Then what we would do? So now in the next accounting part, dishonor of bill we are picking up. Dishonor of bill. Dishonor of bill means when drawer or the party goes to the drawee on the maturity date to what we call get back their cash. Drawee is not in a position to pay the cash, or drawee fails to pay the cash, or drawee fails to honor the bill, then it is known as dishonor of bill. Suppose bill is retained by me. I am the drawer. I had drawn the bill and I retained it till the maturity date. So on the maturity date, when I ask the drawee to pay back my money, and if drawee fails, then it will be known as dishonor of bill. Likewise, it could be a possibility that I might have had discounted the bill. Now on the maturity date, bank will what we call approach drawee, and if drawee fails, again it is dishonor of bill. Simple words, when on the maturity date drawee fails to meet the bill, that is known as dishonor of bill. Now that there is a problem. Suppose bill was retained by me, correct, till the maturity date, and on the maturity date I goes to what we call drawee and ask him to pay back the money, and if drawee due to some or other reason actually fails to do so, then of course I will not receive the money. In accounting language it will be termed as dishonor of bill. But here one problem is there. If somebody who has to give my money simply says he is not in a position to do, he is not going to pay me, would I sit idle? Definitely I am going to take some action. But in order to take the action, I will have to take a legal process. Now, when I presented the bill to the drawee on the maturity date and drawee fails, then of course it is dishonorment of bill. But the proof, but the onus means the burden, but the onus or the proof that I did not receive the money will have to be given by me. That means the person who holds the bill, it is the duty of that person to prove that he did not receive the money. It is not the duty of the drawee to tell that he did not pay the money. Why he will do that? So it is the duty and the onus of what we call that drawer or the person who holds the bill. It is the duty of the drawer or the holder of the bill to prove that they did not receive the money. So on the maturity date, when I did not receive the money, I will have to prove to the law that I did not receive the money. So in order to prove the law, what I will do, I will go to a qualified person that is known as notary, N-O-T-A-R-Y, correct? Notaries people sometimes say. So notary, I will ask the notary to note down this fact that I did not receive the money. So notary, in a what we call stamp papered, what we call paper, will note down the facts that this person did not receive the money in spite of his best efforts. When notary notice down these facts, it is known as noting, and of course he is going to charge something for the same. So all in all, it will be known as noting charges. So you must understand that when bill is dishonored, it is the duty of that person who is holding the bill on the maturity date to prove that he did not receive the money. And in order to prove, he needs to get the facts noted, and for the same he will have to pay some charges known as noting charges. Is it clear to you or not? So noting charges will be paid by the party who was supposed to receive the money but could not receive the money because of default made by the drawee. So dishonor of bill. So we will see the cases of dishonor of bill, of course under all the options, correct? So now we are presuming in all the cases that on the maturity date bill did not realize, correct? So first option. When bill is retained till maturity, that means drawer retains the bill when drawer retains the bill till maturity. So, in order to understand this, let us say on 1/1/2020, F1 sells goods to F2. Correct? F2, and he draws a bill on F2 which is accepted by F2 and returned back to F1. So BR on 1/1/20 is received. Correct? The example goes like that F1 sells goods to F2 on 1/1/2020 and draws a bill. Let us say bill is of 3 months. Now, if bill is of three months, then 1/1/2020, we will add 3 months and we will add 3 days, 3 grace days. So ultimately, our maturity date will be 4/4/2020. Let us say on this date, bill dishonored. Bill was retained, but bill dishonored. Drawer retains the bill till 4/4/2020, but bill is dishonored. Correct? Let us say drawer pays notary charges. Drawer means F1. F1 pays notary charges of rupees 1,000. Okay, make it 10,000. However, it is a big amount. Very small amount is generally charged. And let us say F1 sells the goods to F2 for rupees 5 lakhs. So this is the question, correct? Now, in this case, what entry drawer will make when bill is retained by him till the maturity date, but bill is dishonored? So first of all, books of F1. F1 is the drawer. One 2020, the entry will be first of all for sale of goods. We are selling the goods to F2. F2 is our debtor because we are supposed to take the money from him. Goods are being sold to him. So 5 lakh worth of goods have been sold. So we are supposed to receive 5 lakh from Mr. F2. Sale of goods. This entry is for sale of goods, correct? On this date, we draw a bill which is accepted and returned back to us. BR account debit to F1 account. Sorry, F2 account. So 5 lakh worth of bill has been accepted. Has been accepted mean he has signed and returned back to us. So BR received. BR received. Now we will reach the maturity date, that is 4th of April 2020. On this date, bill is not honored. So when bill will not be honored, first of all you think, if bill would have been honored, what would have been the entry? If bill would have been honored, you would have received the cash. You would have written cash account debit to BR account. That means on the maturity date, you will have to return the bill to the drawee. So to BR, you are going to write at at any cost whether the bill is honored or dishonored, because BR will move out of your fold, correct? So 5 lakh worth of bill will move out, but the point is that if you would have received the amount, you would have written cash account debit, but you are not receiving the amount. Because you are not receiving the amount, you will again debit F2. F2 is your debtor, correct? It means whenever the bill will be dishonored, remember this rule, whenever the bill will be dishonored, the drawer will debit the debtor. Debtor is the person to whom he had sold the goods, and from he has to receive the money. So F2 is the debtor, and he is going to actually debit F2. Because we did not receive any money from F2, so we will debit him again. So once again he will become our debtors. Is it clear to you? At this amount we will receive from him in future with some new agreement. Is it clear to you or not? So simple rule. In this case, first of all, we are analyzing when bill is held till maturity. But problem is there. Now we are not going to debit him with rupees 5 lakh, because we also paid notary charges of 10,000. You remember? So the new bill will be worth rupees 5 lakh 10,000. New bill will be worth rupees 5 lakh 10,000. Why new bill will be of rupees 5 lakh 10,000? Because you paid noting charges. Are you getting my point or not? So this time, the new bill, you are going to debit F2 with 5 lakh 10,000 rather than 5 lakh. And you will write here 2 noting charges. That means now you have to receive from F2 5 lakh 10,000, 5 lakh for the earlier amount and 10,000 for the noting charges which you paid, because it was your duty to prove that you could not actually realize the money. Is it clear to you or not? Now we will move over to books of F2. Books of F2. What entries F2 is going to pass? F2 is the drawee. 1/1/2020, he has purchased the goods. So obviously he is going to debit purchases account, no doubt about that. Purchases account debit. Correct? 2. Purchases account debit. 2. F1, he has purchased the goods from F1. So 5 lakh, 5 lakhs. Purchase of goods. Correct? On the same date, he accepts a bill. He accepts a bill means he signed the bill and returned it to F1. F1 account debit to bills payable account. That is 5 lakh. Bill accepted. For 2020. Bills payable will come back to him. 5 lakh worth of bills payable is coming back to him. Are you getting my point or not? Now noting charges which were actually paid, noting charges were actually paid by F1 drawer. But ultimately those noting charges will be recovered by the drawer. So that is why noting charges is a sort of loss to the drawee. Noting charges. See, remember one thing, noting charges actually paid by drawer, but he will recover 10,000 from what we call drawee. So that is why drawee will debit noting charges 10,000. That means now drawee will pass this entry, bills payable account debit, noting charges account debit to what we call F1 account. If bill would have been honored, he would have written 2 cash, but he did not pay the bill. So once again, F1 will become creditor of what we call F2. So 5,10,000. So new bill, as you can see, is worth rupees 5,10,000. Correct? Bill dishonored. Entry in the books of drawee in all the cases will remain same as far as dishonor is concerned. Is it clear to you or not? Now suppose bill is discounted. Option 2. Option 2 now we are picking up. When bill is discounted, when bill is discounted, and dishonored on the maturity date. Dishonored on the maturity date. Correct? To understand this, let us write an example. On 1/1/2020, W1 sells goods worth rupees 5 lakhs to W2. W1 draws a bill which was accepted by W2. Accepted by W2. On the same date, W1 gets the bill discounted, discounting charges amounted to rupees 10,000. On the maturity date, that is 4th of April 2020, W2 failed to meet the bill. Failed to meet the bill means failed to honor the bill. Failed to meet the bill. Now in this question, it is given to you that on 1/1/2020 we sold goods, W1 sells the goods, and he also receives the bill on this date, and he also gets the bill discounted on this date. That means bill this time is discounted on this date itself, and discounting charges is given to you. So bill is discounted on this date. When bill is discounted on this date, it means on the date of maturity, bill is not in the hands of W1. On the maturity date, bill is in the hands of the bank. Actually, maturity date is given to you 4th of April 2020. Now on 4th of April 2020, because bill is in the hands of the bank, so bank will have to go to, in fact, bank will have to approach W2. And when W2 will not honor the bill, bank will try to recover the amount from W1 because W1 discounted the bill from the bank. And bank has paid the money to W1 already. So on maturity date, when bank will not receive the money from W2, to whom bank is going to actually hold liable for? Of course, bank is going to what we call hold the W1 as the liable and will ask them to what we call honor this bill. So when bill is dishonored, correct? So we shall have to pass the entry. We also presume bank pays notary charges. Bank pays notary charges of 10,000. Why bank will pay the notary charges? Because on the maturity date, bill was in the hands of the bank. Because bank paid notary charges of 10,000, bank will not recover this amount now from W2, but bank is going to recover entire amount from W1. Is it clear to you? So now in this case, what will be the entry? So first of all, we shall write the entry in the books of W1. Books of W1. In the books of W1, my entry will be 1/1/2020, first entry, sale of goods, W2 account debit to sales account. Amount is actually 5 lakhs. Correct? Sale of goods. On this date, you are going to receive a bill also. BR account debit to W2 account. 5 lakh, 5 lakh. You will write here BR received. You get the bill discounted on this date itself. So on this date itself, that means on 1/10, in fact 1/1/2020, you get the bill discounted. Your entry will be bank account debit you will not receive 5 lakh, you will receive 4 lakh 90 because bank charged 10,000 known as discounting charges. So discounting charges in this case rupees 10,000. Now this BR will be given to the bank. 5 lakhs. Discounting of bills. Now you will reach the maturity date 4/4/2020. If bill would have been honored, then you would not have passed any entry, because amount would have been received by the bank and not by you. But problem is that bill is not honored on this date. Because bill is not honored, so bank is not going to receive any money, and bank is going to ask from you to actually ask you to pay. Is it clear to you? So in this case, because bill is not honored on the due date, we will have to pass the entry, because now bank is asking from us. Bank is not receiving any money, so bank is going to actually hold us liable for the same. So what entry we are going to pass? Just a moment ago, I did say that whenever the bill would get what we call dishonored, in that particular case, at any cost, in the books of drawer, data means drawee actually. From the perspective of the drawer, drawee is data. You are going to debit the data account, that is drawee account. Drawee is W2. He will again become your data. But how much bank is going to ask the money from you? Because bank paid notary charges also, so bank will ask you to pay to the bank 5 lakh plus 10,000. So you will recover 5 lakh 10,000 from W2, because you will have to pay, you means W1 will have to pay to the bank 5 lakh 10,000, because bank did not receive the amount of bill from W2. So bank is going to actually W1 and will tell them the entire story. You got the bill discounted from us, but W2 did not pay us, so you please pay us 5 lakh plus the noting charges which we paid. So W1 will have to pay to bank 5 lakh 10,000, but now W1 will debit W2, because W1 will recover now from W2 5 lakh 10,000. So W2 account debit to BR account, to bank account. 5 lakh 10,000. Please try to understand this point once again. In this case, what is happening? W1 is the drawer of the bill. W2 is the drawee. Correct? We received the bill. Unfortunately, we discounted the bill. We discounted the bill. We discounted the bill. Because we discounted the bill, now this bill is in the hands of the bank on the maturity date. On the maturity date, bank goes to W2 and asks them to pay the money. W2 failed. Because W2 failed to pay, so bank will have to prove that they did not receive money. For the same, they will have to pay noting charges of 10,000. They paid noting charges of 10,000. Then only it will be proved that bank did not receive the money. Now bank will take this bill to W2 and ask W1, bank now will take this bill to W1 and ask W1 to pay them 5 lakh amount of bill plus the 10,000. So this entry means, this entry is being made in the books of W1. This entry means W1 is supposed to recover 5 lakh 10,000 from W2 and he has to pay that amount to bank 5,10,000, because you can see liability on W1 with respect to bank is 5,10,000. So this dishonor entry shows that W1 is supposed to receive 5,10,000 from W2, and this amount is payable to bank 5,10,000. Correct? So dishonor of bill. Dishonor of bill. So this is the entry. You got my point or not? And now books of W1. Sorry, books of W2 drawing. Now we go over to W2. 1/1/2020. W2 purchases goods. Purchases account debit. Purchases account debit, that is 5 lakh. To W1 account. We purchased goods worth rupees 5 lakhs. This entry is for purchase of goods. On 1/1/2020, we accepted a bill. So W1 account debit to bills payable account. Accepted means we signed the bill and returned to W2. So we have given a written promise now that we will pay back you 5 lakh. This bill is discounted, but we are not going to pass any corresponding entry with respect to discount. However, on the maturity date, one thing is clear, our bills payable will come back to us. Our bills payable was worth rupees 5 lakh, it will come back to us. It is a surety whether bill is honored or dishonored. Correct? But bill is not honored, because if it would have been honored, I would have simply returned 2 cash. But it is not honored, so now my liability has gone up by 10,000, 5 lakh plus noting charges. Because the party which paid noting charges will recover this amount from you, directly or indirectly. So noting charges is a loss for you, 10,000. Now 5,10,000 worth of amount you are supposed to give not to the bank now, but to W1. So that is why I said, in case of dishonor, in all the cases, entry in the books of drawing will remain same. Bills payable account debit, noting charges, if any, debit to creditor account. Creditor means W1 is creditor for W2. So W1 is supposed to pay to, W2 is supposed to pay to W1 5,10,000. So this will be the entry as far as W2 is concerned. Is it clear to you or not? I hope it is cleared. We are going to pick up option 3 with respect to dishonor of bill. Correct? So here we go. That is third option we are now picking up. Third option. Correct? When bill is endorsed, when bill is endorsed and dishonored, when bill is endorsed and dishonored. Correct? We shall try to understand this with the help of an example. So here we go along with me. Now write the example. Example. Write along with me. On 1/1/2021, X sells goods worth rupees 50,000 worth rupees 50,000, worth rupees 50,000 to Y, and drew a bill which was accepted by Y, which was accepted by Y. So Y gave his acceptance, correct? X endorsed the bill to his creditor W on the same date. On the maturity date, that is 4/4/2020, bill gets dishonored. W, because bill is in the hands of the endorsee W paid, time and again I have told you, on the maturity date, the party having the bill will approach the drawee. In this case, W is having the bill on the date of the maturity. He must have approached drawee. Drawee defaulted. So now W will have to prove that he did not receive the money. For the same, he will have to pay the noting charges. So W paid noting charges of rupees 5,000, of rupees 1,000, right? Correct? So in this case, first of all, we are going to pick up books of X, drawer. 1/1/21, goods have been sold to Y. Y account debit to sales account. 50,000 worth of goods have been sold, so you write 50,000. Sale of goods. On the same date you received a bill, you will write the entry BR account debit to Y account. You received the bill for rupees 50,000. You will write here 50,000. Correct? Acceptance received. Now, on the same date, you endorse the bill to one of your creditor. Your creditor is W. You can write W account debit, you can write endorsee account debit, you can write creditor account debit. You are transferring the bill to endorsee W. So this bill is now in the hands of W to BR account. Correct? Bill endorsed. On the maturity date, if bill would have been honored, you would not have passed any entry. Reason is very simple, because on the due date, bill is in the hands of the W will receive the money. So you are not going to pass any entry, or you would not have passed any entry had this particular bill been honored. However, bill got dishonored. Because bill got dishonored, you means Mr. X, you have transferred the bill to W, and W did not get the money on the maturity date, so he will get hold of you. He will ask back for his money, and you will definitely get hold of the drawee. Are you getting my point or not? So, what entry? Dishonor entry. Time and again I have told you, whenever the bill would get dishonored, drawer will redebit drawee account, Y account debit. 2. And he will credit the party which is having the bill on the due date of maturity. Bill is in the hands of W. He will write here 51,000. 50,000 for bill, 1,000 for noting charges paid by W. This entry signifies that Mr. X now is supposed to receive 51,000 from Y and supposed to give that amount to W. Are you getting my point or not? So bill dishonored. So these are the entry which would be written in the books of what we call X. Now books of Y we shall pick up. Books of Y. One 21. What entry Y will pass? Purchases account debit. Two. X account. 50,000, 50,000. Y has purchased the goods on credit from Mr. X. So purchase of goods. This will be the entry. Purchase of goods, isn't it? Then on the same date, he accepts a bill. Accepting a bill means he is signing the bill and returning it back to X. So X account debit to BP account 50,000, 50,000. Acceptance given. No corresponding entry will be passed by W with respect to endorsement of bill. It is complete choice of the drawer whether he want to keep the bill or want to get it discounted, or he can simply endorse it. Y is not concerned with such actions of drawer. He is only concerned only with respect to maturity date. On the maturity date, one thing is clear: bills payable of Y will come back to him. Bills payable account debit. 50,000 worth of bills will come back to him. Had he honored the bill, he would have simply written to cash, but he didn't. So he will now write noting charges, provided noting charges are there. So in this case, noting charges are there. So party which paid the noting charges will try to recover the same. So that is why it is a loss to drawee. 2. And he will always credit original drawer account X, that is 51,000. So this is the entry. Dishonor of bill. We will continue with many more cases. We will continue with many more cases of, as I said, dishonor, but in between I am picking one more topic, that is with respect to renewal of bill. Now renewal of bill is similar to dishonor of bill. That is the reason actually I am picking up this topic. Renewal of bill. What does renewal of bill signifies? Renewal of bill simply signifies that often on the maturity date, drawee feels that he is not in a position to pay back the money. So he approaches the drawer and requests him to actually draw another bill. No problem for drawer. He will generally accept such what we call request. But because now drawer is not going to receive the amount on the maturity date, because on the maturity date now original bill will be cancelled. So he will not receive the money. He will now receive the money on the maturity date of the new bill. So the time period ranging from the maturity date of the old bill to the maturity date of the new bill, this time period is a sort of delay for the what we call drawer. So drawer is not receiving the money on the original maturity date, now is going to receive the money on the maturity date of the new bill. That means now he is having some sort of delay as far as receipt of his money is concerned. So he is going to ask the drawee, well, I am ready to accept your request, I am ready to draw a new bill, but you will have to compensate me for the time period, correct, for the delayed period. So generally he is going to charge some interest from the drawee for the delay. Is it clear to you or not? That is renewal of bill, and renewal of bill is absolutely similar to dishonor of bill. We will see just now. Drawer. Write in one column drawer. We presume that name of the drawer is X. In one column write drawee. We presume name of the drawee is Y. Correct? As I just said a moment ago, often drawee feels that on the maturity date he will not be able to pay the money. So he asks the drawer to cancel the old bill. So first entry for cancellation of old bill. Cancellation of old bill. Cancellation of old bill. Cancellation of old bill means you are not receiving the money on the maturity date against the bill. So it is similar to dishonor. And just a moment ago I said whenever the bill will be dishonored, the drawer is going to debit drawee account, that is Y account. So Y account debit. We are presuming that bill is in the hands of the drawer till the date of the maturity. Because generally in case of dishonor, that party is credited which is having the bill. But bill of course is in our hand, but we cannot write in our books our own name, so we shall write to BR. Corresponding to this entry, Y will pass, his bills payable will come back to him, and he will credit again his drawer account. So that is entry for cancellation or dishonor of old bill. Now, we will ask before drawing the new bill, drawee to pay us some interest for the delayed period. So there are two possibilities. Y may pay the interest right now, he may not pay the interest right now, but at a later date. So when interest is paid in cash, when interest is paid in cash, when interest is paid in cash, no problem, our entry will be cash account debit to interest account. We will receive cash, interest is a gain to us. Corresponding to this entry, drawee is going to pass interest account debit because interest is a loss to him. Interest account debit to cash account. he will pay the interest. But as I said, there are two possibilities with respect to interest. Either he will pay immediately in cash, or when interest is not paid in cash, when interest is not paid in cash, when interest is not paid in cash doesn't mean that drawee is not going to pay us. He will pay us, but at a later date. So when interest is not paid in cash, instead of writing cash, we will simply write Y account, because he is supposed to pay this amount to interest account. That's all. That is the difference. And here he will write interest account debit to X account. So these are the entries with respect to renewal of bill. Correct? Welcome again. In the last session we were discussing the renewal of the bill. We pick up one question. Just have a look over question number 11. Question number 11. Correct? I am not putting the sheet before you. Just go through the question. On 1st of April 21, YF accepts a bill. So YF accepts a bill means YF is not the drawer. He is the drawee. So in this question, case study 11 now we are picking up. In fact, I will have to take a new sheet. Correct? Just have a look over here. Just wait. Case study 11. Correct? Case study 11. In this question, it is given that YF accepts a bill which is drawn by XF. That means XF happens to be the drawer. Correct? XF in this case is drawer. He is drawing the bill. And he is drawing the bill upon YF. He is drawing the bill upon YF. So YF happens to be drawee, and he has drawn the bill in settlement of a debt. It means YF was supposed to pay us 50,000 due to some or other reason. We are not concerned with that. Important thing is that YF was indebted to XF, and that is why XF is drawing a bill upon him. As you can see, the tenure of the bill is 2 months. 2 months. And you can also see that amount of bill is 50,000. Correct? Question further states that this bill was drawn on 1/4/21. However, on the maturity date, this bill got dishonored. Question states that because the tenure of the bill is 2 months, I will add 2 months. We will reach 1st of June 21. I will write 3 days of grace. We will reach 4th of June 21. It means this is your maturity date. On this date, this bill got dishonored. This is your maturity date. And on this date, this bill got dishonored. Dishonored. Because this bill got dishonored, not only it got dishonored, but XF had to pay noting charges. It means on the maturity date, bill was in the hands of XF. He paid noting charges of rupees 200. He paid noting charges also. Correct? Now, on 4th of June 21, remember one thing, 4th of June 21 is also the maturity date. On this date, YF request for a new bill. He requests for a new bill. Everything is written in the question. Request for new bill. Of course, X agrees and he draws a new bill, but tenure of new bill is 73 days. Tenure of new bill is 73 days. Tenure of the old bill was 2 months and tenure of the new bill is 73 days. When the tenure is in days, then sometime it becomes a little bit complicated to compute the maturity date. So first of all, we need to compute the maturity date. New bill has been drawn on 4th of June 21 and tenure is 73 days. Time period is 73 days. So how to compute the maturity date? First of all, coolly think how many months are there in the month of June. So 30 days. Right now we are on 4th June. What I am doing, I am adding 26 days. I want to reach 30th June. I want to finish this month. By adding 20th of June, by adding 26 days to 4th of June, I reach 30th of June 21. So out of 73 days, 26 days have been utilized, but 47 days are still remaining. And we have reached here. Think about the next month, July, 31 days. Add 31 days, subtract 31 days. By adding 31 days, you reach 31st of July 21. 31st of July, not June. Correct? But you are left up with only 16 days. Add these 16 days here. So your 73 days time period is over. By adding 73 days to 4th of June, you reach 16th August 21. So if you will add 73 days to this date, you will reach over here. But don't forget to add the grace days. Irrespective of the fact whether tenure happens to be in months or what we call in days, we are supposed to add the grace days. So grace days shall be added. 19th of August, this will become our maturity date of new bill. Maturity date of new bill. Of new bill. It means drawer who was supposed to receive the money on 4th of June 21 will receive the money almost now after 73 days. So a delay of 73 days almost there. So he is charging an interest of 18% and it is written in the question that interest is paid in cash. Correct? So this is the question. So now we can pass the entries. First of all, write books of XF. XF is your drawer. Now first of all, you let me know, are there any sales in the question? So this time no sales is given. Correct? So don't pass any entry for sales. On 1/4/21, simply what you are doing, you are receiving a bill. It is given that XF has drawn a bill. So you will write the entry BR account debit to YF account. You are drawing a bill on YF because YF was supposed to pay you 50,000 due to some or other reason. So 50,000. This will be your first entry. Acceptance received. So you have received an acceptance. Correct? Now, on the maturity date, that is 4th of June, which we computed earlier, This bill got dishonored. Because bill got dishonored, drawee account, YF account will be debited. We will send back his bills payable. In fact, on our side it is BR, so we will return the BR, that is 50,000. But we paid noting charges also. We will try to recover that also. So this is the entry for dishonor of bill. Bill on the maturity date was in our hands. So that is why we are writing 2BR, and we must have paid noting charges, so we will try to recover that. It means after the dishonor, Y is supposed to pay us not 50,000, rather 50,200. Correct? Dishonor of bill. So new bill logically will be based upon this figure, 50,200. However, when we are drawing a new bill, we know that we are supposed to receive the money now almost after 73 days. We are going to charge interest for the same. And interest has been paid in cash. We shall write here cash account debit. We are receiving the interest to interest. How much interest? Remember one thing, interest will be computed on the amount now which is due from Y. Now we are supposed to receive 50,200 from Y. 18% interest we are charging. But this interest shall be for 73 days. That is period between the maturity date of the old period and the maturity date of the new bill. 73 days divided by 365. So, when you will compute this, it will be near about 1807 approximately. So you have received this interest. Now you will draw the new bill. On 4th of June 21, you will draw the new bill. And write the narration interest received. Now new bill, BR account debit to YF account, acceptance received for new bill. For new bill. Amount is how much? 50,200. 50,200. Correct? It is given that new bill was met on the maturity date. It is given in the question. So maturity date of the new bill is 19th of August 21. So on this date you will receive the cash because bill is being honored and bill is in your hands, and you will return his bill. You will receive 50,200. New bill honored. So this is the entry which you are going to pass in the books of XF. Books of Y, that is YF. First entry will be on 1st of April 21. On this date, you have accepted, you have given the acceptance to XF. XF account debit to bills payable account. $50,000. You might have taken a debt from XF, so for the same you are actually accepting a bill. Acceptance given. Now, on the maturity date, this bill got dishonored. You did not honor the bill, correct? Because you did not honor the bill, just wait. Because you did not honor the bill, on 4th of June 21, your bills payable will come back to you. Because drawer has paid noting charges, he will recover that from you. Noting charges account debit. Two, you will credit XF account. So now you are under an obligation to pay 50,200 after dishonor. Now on 4th of June 21, you request for a new bill which is accepted, but you will have to pay interest. You paid the interest. Interest account debit. To cash account. We have already computed the amount of interest, so I am not against showing the computation of interest. 50,200 into 18% into 73 days divided by 365. Interest paid. Correct? Now, on this date, a new bill is drawn upon you and you gave the acceptance. XF account debit to bills payable account. Acceptance given. For new bill. Amount of new bill is 50,200. On the maturity date, this bill is met on the maturity date. Correct? Maturity date is 19th of August 21. You will write what? Your bills payable will come back to you. And you will honor the bill, and you have honored to cash. 50,200 will be the amount of the new bill. Is it clear to you? This was with respect to what we call renewal of bill. Clear? I did tell that dishonor cases will be continued. Pick up illustration or case study 12, whatever you may like to write. Twelfth. Case study 12 states that on 1st of August 21, A4 sold goods of the value of rupees 2 lakh to B4. So far the question goes like that A4 is the seller. He sells goods to the tune of rupees 2 lakh to B4. Correct? That is on 1st of August 21. Sales rupees 2 lakhs. Question further states that B pays 36,000 in cash and accepted the bill for balance for 2 months. What B4 does? He pays 36,000 in cash. 36,000 he pays us in cash. In cash means on the same date on which goods have been sold. And for the balance amount, now the balance amount will be 1,64,000. 36,000, and on the due date he pays 36, so balance amount must be near about 1,64,000. Correct? He accepts a bill, and tenure of this bill is 2 months. Tenure of this bill happens to be 2 months. On the due date, B4 expressed his inability to meet the bill and offered to pay 80,000 in cash and accepted a new bill for the balance plus interest at 15% per annum for 3 months. Now what happens on the due date? So first of all, we need to find out the due date of this bill. Now due date of this bill will be (1/8/21) is the original date at 2 months. Tenure is 2 months. You will reach 1st of October 21. Add 3 grace days. You will reach 4th of October 21. This is maturity date. Correct? This is your maturity date. Now on the maturity date, what happens? Out of 1,64,000, on the maturity date, out of 1,64,000, he pays 80,000. Pays 80,000. And for the balance will be 84,000. For the balance, he requests for a new bill. For the balance, he requests for a new bill. Of course, new bill definitely we will draw, but we will charge interest 15%. New bill is for 3 months. New bill is for 3 months. So we are going to charge interest on the new bill also. So what will be the amount of interest? Interest will be 84,000. Rate of interest given to us 15%. And because new bill is for 3 months, that means this much is the delay which is being created. I will need calculator. So that will be 84,000 into 15% in divided by 4. So interest will be equal to 3150. Your interest will be equal to 3150. Correct? On the maturity date, question states that new bill is met. Is it clear to you or not? Anything else is given in the question? No, nothing is given in the question. Is it clear to you or not? So, I will keep this sheet over there, and now we can pass down the entries. Journal of what's the name actually? Sometime it becomes a big problem. A4, correct? Date 1st August 21. We sold the goods to B4. B4 account debit to sales account. Amount of sales 2 lakh. Sale of goods. We drew a bill on the same date. Entry will be BR account debit to B4 account. But before that, you write cash account debit because he paid 36,000. So first you write the entry for the receipt, 36,000. Cash received against sales. On the same date, you are also receiving a bill. He has accepted a bill for the balance. B4, BR account debit to B4 account, 1,64,000. BR accepted or BR received or acceptance received, correct? You reached the maturity date. You computed the maturity date as 4th of October 21. On the maturity date, he is paying you out of 164,80,000. So you will write here cash account debit to B4 account. Amount received against bill. Against bill you are receiving the amount, isn't it or not? Old bill is now being cancelled. So what will be your entry for the cancellation of the old bill? For the cancellation of the old bill or dishonor of the old bill, again you will debit B4. B4 account debit. But when, first of all, write B4 account debit to, because bill was in your hands only. So you will credit BR account. This time no noting charges have been given. If there would have been any noting charges, you would have written 2 noting charges. Dishonor of bill. Correct? Now, entry for interest. You are not receiving the interest in cash. If you would have received the interest in cash, you would have written cash account debit. Now you will write B4 account debit. B4 account debit to interest account. We just computed the interest when we were analyzing the question. 84,000 into 15% into 3 by 12. 3150 was the amount. Interest due. Now you will impose the new bill. You will draw the new bill. BR account debit to B4 account. What will be the amount of this bill? 84,000 you were supposed to receive, which you did not pay you earlier. Now interest also hasn't been received, so you will write here 3150. You will credit this fellow by this much. So new bill amount will become 87,150. You got my point or not? Now on the maturity date, new bill has been received. New bill drawn. You have drawn the new bill. Now, remember one thing, new bill has been drawn on 4/10. See here, new bill has been drawn on 4/10/21. And new bill is of 3 months. So you will receive 4th of January 22. Add 3 days of grace. So 7th January 22 is the maturity date. So on 7/1/22 you will write here cash account debit to BR account. On the maturity date of the due bill, B4 has paid the amount 80. What was the amount? 87,150. Let me see. The sheet is here. Right. 87,150. Bill honored. New bill honored. Is it clear to you or not? Now, we will also take the journal of what's the name? B4. 1st of August 21. Purchases account debit. 2. A4, drawer name is A4. Amount is 2 lakh. Purchase of goods. Correct? On the same date you accept a bill, A4 account debit to BP account, to cash account. You also paid some amount in cash. You were supposed to pay to A4 2 lakh. You paid 36,000 in cash. I have made a combined entry. So 1,64,000 is the bill which you are accepting. Cash paid and bill accepted. And bill accepted. Correct? Now, you will reach the maturity date. Maturity date will be 4th of October 21. On the maturity date, you are paying to A4 a cash of 80,000. Out of 164. So cash paid against bill. a cash of 80,000 has been paid by you. And of course you are requesting for another bill. On 4th of 10, 21, new bill of course will be drawn upon you, but before that you will have to pass the interest entry. Interest is a loss to you. Interest account debit. We have already computed this amount 3150, but you did not pay the interest. So you will write here 2A4. Interest due. Now you will accept the new bill on this date itself. A4 account debit to bills payable account. But new bill amount will be 87,150. You are supposed to pay 84,000 to Mr. A already, and now 3150 for interest, so 87,150. Acceptance for new bill. Wait a minute. Acceptance for new bill. Of course the new bill is honored. We computed the date, that is 7th of January 22. Cash account debit to your bills payable will come back to you. I'm sorry, in between our staff came in, I was talking to him. So your bills payable will come back to you. You write here to cash, and you will pay 87,150, which you have paid. Bill honored. Correct? We will continue. So welcome again to this particular session. Now we are picking up case study 15. Case study 15, correct? Case study 15. Just have a look over the material. Question states that, this is given here, A7 sells goods for rupees 4 lakh to B8 on 1st of January 2019, and on the same day draws a bill on B8 for 3 months. So here in this question it is A7 who is selling the goods to B. Correct? He is selling the goods to B7, B8 in fact, and goods have been sold on 1st of January. As you can see, amount of bill, sales amount happens to be 4 lakhs, and he draws a bill on the same date. B accepts it and returns it to A7, who discount it on 4th of January 2019. So BR is received on the same date, but in this case what A does, A discounts it on 4th of January. 4th of January he discounts the bill. The original bill tenure is 3 months. And 4th of January, for how much he discount, that is written in the next page. We move over to the next page. At 6% per annum. So because bill is for 3 months, almost 3 months prior to the maturity date, we discount the bill. So he discounts the bill. So what will be the amount of discount? Because bill amount happens to be 4 lakh into 6%. Because maturity date of this particular bill will be 4th of April 2019. So we are discounting it 3 months prior to the maturity date. So 3 months discount will be computed 3 by 12. If you will compute, it will be something in the vicinity of 6,000. Correct? 24 divided by, right, it will be 6,000. Question further states that the acceptance is dishonored on the due date. So maturity date of this bill must be 4th of April 2019. Question states that bill dishonored. On this date, bill dishonored. Because we had discounted the bill on the maturity date, bill is in the hands of the bank. Bill is in the hands of the bank, it means. Isn't it? And on this date, bank pays noting charges. Because bill is in the hands of the bank, so bank will have to pay the noting charges. Bank pays noting charges to the extent of 2,000. Bank pays 2,000 as noting charges. On 4th of April, that means on this date itself, B8 accepts a new bill. B8 accepts a new bill. Accepts a new bill. And new bill will be bill amount plus noting charges. In fact, that will be the amount of new bill, and on the basis of this we will compute the interest. Interest is at 12%. Interest will be at 2%. So interest which you are going to compute, see here, original bill amount is 4 lakh. Bill is with the bank. Bank pays 2,000. Because bank did not receive the bill on the date of maturity, bank will definitely hold you responsible for the same. Because you had drawn the bill on B8 and you gave this bill to bank, and bank approaches B8 on the maturity date, did not receive the amount, bank will definitely hold you responsible. Now, you will take 4,02,000 rupees from a B8 and you will give it to bank. But along with that, you will pay interest, because bank is now recovering the amount at a later date, correct? So whatever interest will be there, it will have to be paid to what we call ultimately bank. So you will compute the interest on 4,02,000, and interest is being computed at the rate of 12%. Because new bill tenure is 3 months, you will compute for 3 months. So interest amount will be equal to 12,060. So all in all, new bill amount will be 4 lakh original bill plus noting charges 2,000 you will recover from drawee B8, plus because delay is created, you will ask Mr. B8 to pay interest of this much also. So ultimately, this will be your total amount of the new bill. Is it clear to you or not? So whatever it is, I think it will be equal to 4,14,060. Yes. So now we shall have to pass the entry. This is the question. Question also. Now question doesn't say that new bill has been honored, so we will pass the entry only till up to the drawing of the new bill. So this is given in this question, pretty long question, correct? So now we are going to first of all have a look journal of A7 or books of A7, whatever you may like to write. Journal of A7. Keep an eye over the question or the sheet where we drew or analyzed the question, where we drew a chart or analyzed the question. So first date is 1st of January 1/1/2019. On this date, A7 is selling the goods to B8. B8 account debit to sales account. Amount is rupees 4 lakhs. Correct? So this is the entry you are going to pass. Is it clear to you? Sale of goods. Sale of goods. On the same date you received a bill, BR account debit to B8 account. Amount will be 4 lakhs. Acceptance received. Then what happened? On the due date, but before that, on 4th of January it is given, on 4th of January, drawer discounts the bill. Bill amount is 4 lakh, discount amount is 6,000, which we computed earlier. So that means out of 4 lakh, we shall receive only 3,94,000. Actually, we are not receiving. Earlier also I told you this bank account means your account in the bank. Bank account debit. Discounting charges account debit. Discounting charges are worth rupees 6,000. 2. BR account. Your BR is moving out. Now it is moving out to bank because you are discounting the bank. You are discounting it with the bank, so BR now will reach in the hands of the bank. Discounting of bill. Now on the maturity date of the original bill, 4th of January 2019. Because bill amount is not met, first of all on the original, on 4th of January 2019, first of all you must remember bill is not in your hands, it is in the hands of the bank. Bank has paid noting charges, also do not forget about that. When bank will pay noting charges, please pay attention. When bank will pay noting charges, it means you are going to debit B8 account. Why you will debit B8 account? Because you are going to recover 2,000 from B8 with respect to noting charges. And you will write here to bank. It means 2,000 you have to receive back from B8 and you will deliver it to the bank. because bank has paid the noting charges. Correct? Noting charges paid by bank debited to B8. It means you will recover 2000 from B8 and you are going to give it back to bank account. Similarly, you are going to pass the entry for interest. Correct? Because original bill now is dishonored. You first of all you pass the entry for the dishonor. So dishonor entry will be your A7 account will be debited. Sorry, B8. The names are very confusing. B8, correct? Okay, I will cut it. B8 account debit. So B8 account is debited with the amount of the bill 4 lakh. You can combine, you could have easily combined these two entries to bank account. I told you, as far as dishonor is concerned, whenever bill will be dishonored, remember simple rule. You are going to debit the drawee and you will credit the party in whose hand bill is there. So bank is the party in whose hand on the maturity date bill is lying, 4 lakh. So you can see logically B8 is now being debited with 4 lakh 2000. You can easily combine these two entries, correct? So dishonor of bill. Also for interest, again you will debit B8 because B8 is not paying the interest in cash. Interest which you will receive from B8 will have to be paid to bank. So directly write here to bank. Actually, this entry is for interest. But interest you are not going to receive. It will have to be received by banks. So interest which we computed, interest due. Interest we computed earlier, 4 lakh 2000 into 12% into 3 by 12, that was 12,060. So now you will simply draw a new bill, and you will draw a new bill. You could have easily combined all these entries. Ultimately, B will pay you that total which we did earlier, 4,14,060. So now new bill you will draw, entry will be BR account debit. Instead of all these entry you could have passed directly this entry, but anyway, BR account debit 4 lakh. You will receive the bill from B8. So total will be equal to 4,14,060. 4,14,060. New bill drawn. Actually, in this question, don't write 4,14,060 because there is a line. Just wait, 4,12,060. Why I am writing 4,12,060, not 4,12,060? Logically, B8 is supposed to pay us, as we did the calculation here. He is supposed to pay us the bill amount. He is also supposed to pay us notary charges. He is also supposed to pay us interest. And all these payment will ultimately will have to be delivered to bank account, no doubt about that. But problem here is that in the question it is clearly given, go through this line, we did not take cognizance of this particular line. On 4th of April, B8 is accepting a new bill at 3 months for the amount then due to A together with interest at 12%. So logically, new bill amount comprises of only bill amount, correct, plus what we call interest amount. So it is better that when you will draw the bill, of course we will receive 4,14,000, but we are not drawing a bill for the noting charges. We are simply drawing a bill for the bill amount plus interest. So that is why it is better to write BR account debit to B8, the 4,12,060 bill amount, that is bill, original bill plus interest. No doubt that B8, the drawee is supposed to pay us 4,14,060, but he has given a promise of 4,12,060. Of course, he will pay noting charges also, correct? So, and noting charges will be received ultimately by the bank, no doubt about that. We have already passed this entry. This amount we are going to receive from B8, and ultimately we will have to pay this amount to bank also. So ultimately bank is going to receive 4,14,060 as I said, correct? Now, corresponding to this, in the books of B8, Journal of B8, first entry, that is corresponding to sales, we will write here, we have purchased goods purchases account debit to, we have purchased the goods from A7, amount is 4 lakh. We will write here 4 lakh. Purchase of goods. We accepted a bill on this date, A7 account debit to bills payable account. Amount is 4 lakhs. Correct? 4 lakh. Then bill was discounted on 4th of January 2019, but no corresponding entry. Don't write in the examination, but I'm just for the sake of understanding. No corresponding entry for discounting. No corresponding entry for discount or for discounting of bill. No corresponding entry, correct? However, on the maturity date of the earlier bill, that is 4th of April 2019, you will write the entry, bills payable, your original bills payable will come back to you. Noting charges lost to you, because ultimately noting charges shall have to be borne by the drawee. Because of his default, noting charges were paid. 2,000. He will credit always drawer, original drawer, A7, 4,02,000. dishonor of bill. Getting my point? Then on the same date, he will pass the entry for interest. Interest is a loss to him. Interest account debit. But he did not pay the interest. He will always credit A7. He will pay the interest amount to A7. A7 ultimately will give it to bank. Interest we computed earlier, 12,060. Correct? Interest payable. Now a new bill is drawn. He has given the acceptance. He will write A7 account debit. He will write here 2 bills payable. So 4 lakh 12,060. Logically, he is supposed to pay 4 lakh 14,060, but question has specifically stated that new bill is for 4 lakh 12,060. That means noting charges he will pay separately and bill amount he will pay separately. Acceptance given. Is it clear to you or not? Correct? So this was the question number 15. Now we pick up yet another question, and this is problem number 16. Just have a look, we analyze this and then we will move further. Case study 16. On 15th of January 2020, K1 sold goods rupees 30,000 for rupees 30,000. Correct? To K2 and drew upon later a bill for the same amount. So first of all, in this question, K1 is the drawer. We have to keep a track of the drawer and drawee. Very, very important. So drawee in this case is K2. He is the drawer. And he sold the goods. So sales amount is rupees 30,000. Drew a bill. Bill tenure is 3 months. 3 months. And goods were sold on 15th of January 2020. On the same date, bill is also received, and bill was discounted by K1 from his bank for rupees 29,250 on January 31st, 2020. So 31st of January 2020, bill got discounted. Bill got discounted. Now this time you need not require to compute the discount amount because it is given bill of 30,000 got discounted for rupees 29,250. So it means discounting charges are 750. Discounting charges rupees 750. On maturity, the bill was dishonored. So first of all, we shall compute the maturity date for the first bill. 15/1/2020, tenure 3 months. 15/4/20, 3 grace days. So ultimately 18/4/20, that will become the maturity date. On this date, bill discounted, bill got discounted. Sorry, bill gets dishonored. Extremely sorry. Bill gets dishonored. On this date, bill gets dishonored. On maturity, the bill was dishonored. He further agreed to pay 10,500 in cash, including 500 interest. That means when the bill got dishonored, correct? Bill got dishonored. Remember one thing, bill amount is rupees 30,000. Out of 30,000, what Droy is doing now, out of 30,000, Droy is paying 10,500 in cash, including 500 interest. In simple words, Droy is making a payment of 10,000. He is making a payment of 500 for interest. Correct? He is making a cash payment of interest. This is cash payment of interest. And this is cash against bill. So out of 30,000 worth of bill, you can say 10,000 have been received. And 500 have been received against interest. So what is the remaining? And accept a new bill for the remaining 20,000. Remaining amount is given to you. Even if it would not have been given, you should have been in a position to compute the same. So remaining amount 20,000. Why 20,000? Because you will subtract only 10,000. This is what you have received against what we call bill. So for the remaining amount, a new bill is being accepted. A new bill is being accepted. Now, this new bill was endorsed by K1 in favor of creditor K3. Now, this bill, new bill, has been endorsed. Endorsed to K3 in settlement of 30,000. Actually, drawer K1 was indebted to K3 for rupees 30,000, but is settling 30,000 by paying 20,000 in settlement of rupees 30,000. Sorry, settling a debt of 20,800. 30,000 I looked over the original bill amount. In settlement of rupees 20,800. Extremely sorry. Correct? K1 was supposed to pay 20,800 to K3, but he settled this account by making a payment of 20,000 because he is offering a bill now to him. In fact, he is endorsing this particular bill. The new bill was met by K2 on maturity. New bill is met on maturity. Now, new bill amount is 2 months. Tenure is 2 months. New bill tenure is 2 months. Correct? A new bill is on maturity honored. on maturity it is honored. So this is the question which we have analyzed. Correct? So now we are in a position to pass the entries. Correct? Should not pose much problem to you. I'm keeping this sheet over here, so have a look over the sheet. Correct? First of all, write journal of K1. K1 is the drawer. Journal of K1. Clear? Write the date. That is 15/1/20. On this date you are selling the goods. You are selling the goods to K2. K2 account debit to sales account. Amount of sales is 30,000. Correct? Sale of goods. Question states that on 31st of January 2020, but before that, on this date, you received a bill. On the same date, you received a bill, so BR account debit to K2, 30,000. Acceptance received. Correct? Now you will reach 31st of January 2020. You got the bill discounted for 29,250. It is given in the question. Bank account debit. This bank account means your bank account in your bank. 29,250 you got the bill discounted for, which automatically means discounting charges are 750. Discounting charges. $750. 2. Now you will give this bill to your bank. That means now this bill is in the hands of the bank. Bill discounted. Correct? You got the bill discounted. After this, what happened? On maturity date. So maturity date of this bill was, which we computed, 18/4/20. On the maturity date, of course, bill got dishonored, but you received 10,000 against bill. So you will write here cash account debit to drawee account. You receive 10,000 against bill out of 30,000. Correct? You write amount received against bill. Out of 30,000, only 10,000 have been received. Now you dishonor the bill. When you will dishonor, you will write here drawee account. Who is your debtor? Any noting charges? No noting charges. 2. When we write the dishonor entry, we have to keep in our mind in whose hands bill was on the maturity date. Bill is in the hands of the bank. So we shall write to bank account. Correct? It means we are supposed to receive 30,000 from K2 and we are supposed to give it to bank. BR dishonor. Now BR dishonored. You will also pass the entry for the interest. You have received interest in cash, cash account debit, to K2. You have received an interest of 500 from K2. Interest received. Logically, this interest should move over to bank account. Are you getting my point or not? You will pay this interest to bank. Remember one thing, because he has paid the interest to you, you'll make an entry now. Bank account debit because he has made the interest payment in cash, and that interest actually should be given to bank. So you will write here bank account debit to cash account. Interest paid to bank. Are you getting my point or not? Right. Similarly, he has paid 10,000. He has paid 10,000 in cash against the bill to K2. In fact, this amount will also have to be paid to bank because bill was in the hands of the bank. So bank account debit to cash account. The cash you received against the bill technically belongs to bank. So, cash received against bill paid to bank. So, interest and the amount which you received against the bill has been paid to bank. So how much now you are supposed to pay to bank? Out of 30,000, 10,000 you have paid, interest you have paid, so 20,000 worth of bill. So new bill, first of all, you will draw. You will write BR account debit. New bill is being drawn, of course, on 18th. All these entries are on 18/4/2020. That is maturity date of the old bill. Now you will draw the bill. BR account debit. Correct? Of course, you will write to, what is the name of that other person? K2. So new bill amount will be 20,000. BR account debit to K2. Acceptance received for new bill. Unfortunately, this new bill has been now endorsed. Logically, 20,000 you are still supposed to pay to the bank because you had given the bill to the bank. In fact, you had discounted the bill from the bank. So, and that bill is now being dishonored. So ultimately, you will have to pay to the bank, isn't it or not? So first of all, we'll write the entry for endorsement. So we endorse this bill K3. You can also write endorsee. K3 is the person to whom bill is being endorsed. He is endorsee. You are giving this bill to K3 to whom actually you owed 20,800. You are giving this bill to K3, bill amount is 20,000. But you owed 20,800. So that means you received a discount. BR endorsed maturity date of this bill will be, because tenure of this bill is 2 months. So what will be the maturity date? Sorry, first of all let me compute. 18/4/20 at 2 months, reach 18th of June 2020 at 3 grace days, 21/6/20. So 21/6/20, no entry because bill is not in your hands, bill is honored. So you are not going to pass any entry because you are not going to receive the money. Money will be received by what we call K3 in this case. Is it clear to you or not? So these are the entries. Now accordingly, we'll pass the entries. Now one more thing in this question, because nothing is mentioned very clearly, we shall presume that we made the payment of 20,000 to bank. It is better you pass that entry also, correct? Or even if you are not passing the entry, you will have to write in a note, it is presumed balance 20,000 have been paid to bank. Paid to bank. So you shall presume. Is it clear to you or not? Now, on the basis of these entries, we shall pass entries in the books of other party. Correct? Other party is K2. January 2020, purchases account debit. That is 30,000. You are purchasing these goods from K1. 30,000. Purchase of goods. On the same date, you accepted the bill. K1 account debit to bills payable account. 30,000. Acceptance given. Correct? On 31 2020, no entry against discounting. On this date, bill is discounted. No entry shall be passed. We will reach the maturity date. Maturity date is 18/4/20. On this date, first of all, we made a payment. We made the payment, correct, to K2, to K1, to cash. This payment we made against the bill. Out of 30,000, 10,000 we paid. Then in this case, we will write interest payment also. We made the payment K1 to cash for interest. Correct? Payment against interest. Now bill is dishonored. Our bills payable will come back to us. Are there any noting charges? Now remaining amount of the bill is 20,000. In this question, let me have a look over the sheet, original sheet. Yes, there are noting charges also. Case study 15, right, there are, in fact, this is case study 15 we are picking up now. Or this is case study 16, sorry, case study 16. In this case, no noting charges are there. No noting charges are there. In fact, this is the sheet here, sorry. No noting charges are there, correct? So, to K1 account, 20,000. Dishonor of bill. We accepted a new bill, so entry for the same we are going to pass now, and amount is of course 20,000. So we will write here K1 account debit to bills payable account. Acceptance for new bill. Acceptance for new bill. Correct? You have given the acceptance for the new bill too. Now, new bill has been met on maturity date. We computed the maturity date of the new bill, that is 21/6/20. 21/06/20. On the maturity date, you paid the bill. Your bills payable will come back to you and you will make the payment. Logically, on the maturity date, it will be K3 who will be receiving the payment. He will produce the bill and he will receive the payment. New bill honored. New bill honored. You got my point or not? Is it clear? Until up to question number or case study 16, I think so. So now we are moving over to case study 17. Case study 17, now we are picking up. Just be ready now. So case study 17 we are picking, correct? Starting the session now. Case study 17. What exactly case study 17 states? Let me have a look. Correct? P5 Limited, in fact, you can have a look over here also. P5 Limited sold goods to Q5 for 10,000 on 1st of January 21 and on the same date draws a bill on Q5 for same amount for 3 months. So first of all, as we go through the question, it is always better to analyze it also. So on 1/1/2020, 1/1/2021, in fact, P5 sold goods. So on this date, P5 is selling the goods to Q5. Sale, and sale amount is rupees 10,000 and amount is being sold to Q5, correct? And on the same date, bill is also drawn. Tenure of the bill is 3 months. Tenure of the bill is 3 months. On the same date, bill is drawn. That means Q has signed the bill and we have received the acceptance. Further, the question states that Q5 accepts the same and returns it to 5. We have already returns it to P5, right? Who discount it on 10th of January 21 with his bank for 9850. So on 10th January 21, bill has been discounted and amount of discount is given to you. He discounted the bill and it is stated that 10,000 worth of bill has been discounted for 9850. That means 9850 we are receiving much earlier, correct, to maturity date, and discount of course is 150. So now this bill is in the hands of the bank. Bank will keep the bill till the date of maturity. Further, it is given the acceptance is dishonored on the due date. Now, since the tenure of the original bill is 3 months, so if we will compute, then the maturity date will be 3 grace days plus 3 months, 4/4/21. That is the maturity date of the original bill. On this date, acceptance is dishonored. So bill is dishonored and bill is in the hands of the bank. Don't let it escape out of your memory. Bill is dishonored. Further, bank pays noting charges because bank will have to prove that it did not receive the amount from Q5, but at the same time bank will ask you to pay. So 50, bill has been dishonored, so a liability will definitely increase as far as your perspective is concerned. Now you are supposed to pay to bank because bank Q5 did not honor the what we call his promise. On 4th of April, it is given on 4th of April, Q5 paid 2,050 including noting charges in cash and accepted a new bill at 3 months for the amount due to P together with interest at 12% per annum. On 4th of April, that means on the same date, Please try to understand the entire story. You sold the goods to Q5. Q5 has accepted the bill. But much before the maturity date on 10th of June, 10th of January, you discounted the bill. That means you have received the cash. Now bill is in the hands of the bank. On the maturity date, bank goes to Q5. Q5 did not pay to bank. In fact, bank incurred 50 also on noting charges to prove this particular fact that it did not receive the what we call amount. Because Q5 did not pay 10,000 to bank, now bank will ask us to pay 10,000 plus the noting charges incurred. So that means when bill is dishonored on the maturity date and bill is not in your hands, because bill is dishonored, a liability will increase. Now you are supposed to pay to the bank 10,000 plus noting charges 50. And you will now get hold of Q5. You will ask the Q5 to compensate you 10,000 plus 50. Correct? So Q5 paid 2,050. Q5 DROI paid 2,050. That is 2,000 for bill plus 50 rupees. Remember one thing, bill amount now is 10,050 after dishonor. After dishonor, you will ask Q5 to compensate by rupees 10,050. Out of that, Q paid 2,000 plus 50 and in cash and accepted a new bill. And he accepts a new bill on this date. Accepts new bill. Accepts a new bill. What will be the amount of new bill? New bill amount will be, because out of original bill of 10,000, 2,000 has already been received. So now you are supposed to take 8,000 from Q5 plus interest. Now new bill tenure is given as 3 months. So 3 months interest you will compute. 3 months interest will be equal to 8,000 into rate of interest is 12%, and you will compute rate of interest, that is 3 by 12. So 8,000 plus interest, that will be equal to 960 divided by 4, 240. So new bill amount will be equal to 8,000 plus 240. 240 is for interest. Is it clear to you? This is the situation. That's all. So make entries in the books of P and of course in the books of Q also. So not a tough question because we have already done now lots of questions. So first of all, we are going to begin with books of P. This is the main solution. Books of P. Correct? Real solution is starting from this particular point. So first of all, on 1st of January 21, you will write the entry for sale of goods to Q5. Q5 account debit to sales account, isn't it or not? Q5 account debit to sales account, this is the entry which you are going to write, and sale amount is actually 10,000. It should not be a big problem for you. Of course, this entry is for sale of goods. Sale of goods. Then the next entry which you are going to pass will be with respect to bill drawn. Correct? On the same date, you have drawn a bill and it has been accepted. BR account debit to Q5. That is equal to 10,000. Acceptance received. You have received the acceptance now. Acceptance received. Correct? Now what happened? You get the bill discounted on 10th of January. 10th of January 21, you will write the entry for discount, bank account debit. So often I have already told you that this bank account is nothing but your bank account in the bank, in your bank. So bank will credit to you. In fact, your bank account will be debited. Indirectly it means. So 9850 and discounting charges account debit 150 and 2 BR, because now BR will move out of your fold and it will be received by the bank. But your liability is not yet over. Even though you have received the money, you have given this bill to bank. Now, if bank receives the money, fine, but if bank will not receive the money on the maturity date, bank will definitely hold you responsible for the same and will ask for repayment. So, discounting of bill. Discounting of bill. Correct. Now, you will reach the maturity date. What will be the maturity date? We have already computed. Maturity date is 4th of April 21. On the maturity date, if bill would have been honored, amount would have been received by bank and you would not have passed any entry. However, the promise was not honored, bill got dishonored, so bank will hold you responsible for the same. You will have to pass the entry. Your entry will be, so often I have been telling, whenever dishonor will take place, you will debit the drawee account, correct? And you will credit the party who was holding the bill on the due date of maturity. Bank was the party. Now, how much you are supposed to pay to bank? 10,000 for the bill and 50 for noting charges incurred by bank. So, you will ask Q5 to pay 10,050. Correct? And this amount will ultimately will have to be paid to bank. Dishonor of bill. So Q5 once again will become your debtor, but at the same time your liability towards bank is 10,050. Dishonor of bill. This is the entry you are going to pass. On the same date, 4th of April, you received from Q5 2050 rupees. Cash account debit to Q5. Out of 10,050, you have received 2,050. Correct? That is, you will write amount received against bill and interest, and noting charges. And noting charges, not interest, against noting charges. So 50 for noting charges and 2,000 you have received against the bill amount of 10,000. Now on the same date you are drawing, you will draw another entry, but that entry will be with respect to interest. Because interest is not received, so you will debit Q5 and you will write here to interest. Interest is a gain for you. Correct? You will write interest receivable. You are supposed to receive interest. Interest receivable. Correct? You will compute the amount of interest. 8,000. Why 8,000? Because out of 10,050, 2,050 is already received. So remaining amount is 8,000. You will compute 12%. You will compute it for 3 by 12. must be equal to 240. Correct? Then you have drawn a new bill. You will write the entry BR account debit to Q5. So, new bill amount must be equal to 8,000 plus 240 for the interest which you are supposed to receive. So, 8,240, 8,240. New bill drawn. Only till up to this particular point you will pass the entry. Is it clear to you or not? Correct? Now, question has also asked us to pass the entries in the books of Q5, so you will write here books of Q5. Now, what will be the entry in the books of Q5? Yes, he purchased the goods, so first entry will be for purchases. Then he accepts the bill, second entry for the acceptance of the bill. He will not pass any entry for the any entry corresponding to discounting of bill, but on maturity he will pass the entry for dishonor, then finally for interest and acceptance of new bill. So you have to think the sequence, and that's all. Otherwise rest of the question is absolutely easy. So 1st of January 21 you will write the entry purchases account debit purchases account debit, correct, to P5. You purchased goods worth rupees 10,000, you will write the entry with 10,000. Purchase of goods. Purchase of goods. Formalities need to be carried out. We cannot escape the same. Narration must be written. Correct? Make it a habit. On the same date, you accepted a bill, you will write the entry P5 account debit to BR account. Of course, amount will be 10,000. Acceptance given. So you have given the acceptance. Then, as I said, no corresponding entry will be passed against the discounting. However, you will reach the maturity date now, 4/4/21. On maturity date, because you did not honor your promise, your bill payable will come back to you at any cost, whether you honor or not. Bills payable will be returned back to you. Amount of bill is 10,000, but the party did not receive the amount, and in fact that party had to pay the noting charges. That party will demand noting charges from you. Noting charges is a loss for you now. Noting charges 240. Sorry, noting charges were 50 rupees only. Sorry, extremely. Correct? Then you will credit original drawer, that is P5, because you are supposed to pay P5 once again 10,000, but along with that noting charges 10,050. After receiving 10,050 from you, P will definitely pay it back to bank. Dishonor of bill. Then we will pass the next entry. Next entry is for the payment which we made on the same date, 4/4/21. We made the payment to P5 account debit. We paid P5 2,050. Of course, 2,000 for bill and 50 for noting charges. Amount paid. You can also write in bracket amount paid for bill and noting charges. Then next entry will be for interest. Remember one thing, that entry again will be passed on 4th of April. Interest is a loss to you. Interest account debit 240. Because you did not pay the interest, you are supposed to pay it to P5, original drawer. You will credit original drawer, interest payable. Then finally, you have accepted the bill. Your entry will be P5 account debit to bills payable account. New bill amount is 8,240. 8,240. Acceptance for new bill. Acceptance for new bill. This is how we are supposed to do this particular question. Is it clear to you or not? Yes, sir. Absolutely. So if it is clear to you, then we can definitely think of doing one more question, correct? That is 18 now. Case study 18. In case study 18, what is given, I am simply going through and will let you know each and every line. Just pay attention here. Sheet is in front of me. Z1 sold goods for 1,15,000 to Z2 on 1/1/2020. 1st of December 2020, goods have been sold. Correct? Z1 sells. Amount is rupees 1,15,000. He sells the goods to Z2. He drew upon Z2 a bill of exchange for the same amount payable after 2 months. Correct? Z2 accepted the bill and sent it back to Z1. So, a BR drawn and tenure of this particular bill is 2 months, as is written in the question. Then it is stated that Z1 discounted the bill immediately with his bank at the rate of 12% per annum. Immediately means on the same date, bill is discounted. Bill is discounted. Bill is discounted at 12%. At 12% per annum. So, your discount amount will be 1,15,000 into 12%. Because you are discounting the bill 2 months prior to the maturity date, you are going to compute interest for 2 months. We will compute it later, but this way it will be computed. Correct? Then, Z2 dishonored the bill of exchange and the bank paid what we call 500 as noting charges on the due date. Original bill is of 2 months. So when we will add 2 months, we will reach 2nd of February 21. We will add 3 grace days. So 4th of February. This will be our maturity date On the maturity date, as you can see, bill is dishonored. Bill dishonored. Bill got dishonored, and because bill is in the hands of the bank, bank pays noting charges. Bank pays noting charges of rupees 500. How much? New bill, before that bank paid 500 as noting charges, yes. Now it is given K2 requested K1 to draw a new bill upon him with interest at the rate of 10% per annum, which he agreed. New bill was payable after 2 months. So because on this date original bill is dishonored, a new bill drawn. Now logically amount of new bill should be 1,15,000, the original bill amount, plus noting charges and plus interest. Logically, correct? How much will be interest? Because new bill will be received after 2 months, you will compute the interest for 2 months. 1,15,000 into 10% into 2 by 12. Into 2 by 12, correct? Then it is given new bill was payable after 2 months. So maturity date of the new bill will be, you will add 2 months to it, you will reach 0421. You will add 3 grace days, so it will be 704. This is maturity date of new bill. Maturity date of new bill. Maturity date of new bill. Logically, this will be your maturity date of the new bill, correct? A week before the maturity of the second bill, K2 requested K1 to cancel the second bill. So, almost prior to, a week before means almost on 1st of April, this bill is cancelled. New bill which you made is also not honored, just wait. So, new bill cancelled. Cancelled means dishonored. Entry for cancellation is almost similar to dishonored because you are not receiving the money. So, he further requested to accept 50,000 in cash. So, that means he pays 50,000 in cash. K1 drew a third bill upon him, including interest of 2,500. So yet another new bill, or third new bill you can say, third bill you can say. So another new bill, which happens to be third bill, first bill, then second bill which was the new bill, and then again a new bill. So this is third bill. Another bill drawn, including interest of 2,500. Interest of 2,500. Third bill was payable 1 month after 1 month. So after this date, this bill maturity date will be, that will be equal to 10/05/21. This is the maturity date of the new bill which was cancelled. So 1 month after that will be 5th of May and 3 grace days. So that is maturity date of third bill or second new bill. Maturity date Question says that third bill was honored, met on maturity date. So pretty long question, but in no way it can be considered as a tough question. Can it be considered as a tough question? You tell me very openly. Sir, it cannot be. Very good. Because it cannot be, then I'm very sure you can manage it by yourself also. Anyway. So, first of all, we write the entry in the books of Z1. Books of Z1. Books of Z1. In the books of Z1, you are going to pass the entry that is on 1st of December. 1st of December 21. Obviously, the first entry will be for sale. You sold the goods to Z2. Z2 account debit to sales account. Correct? Amount of sales, as we know, is 1,15,000. Being goods sold. Goods sold. On the same date you received a bill, you will write the entry BR account debit to Z2 account. Amount will be 1,15,000, 1,15,000. Acceptance received. After receiving the interest, you got the bill discounted. It is stated in the question, you got the bill discounted on the same date. Your entry will be bank account debit discounting charges account debit, discounting charges. Correct? So how much will be discounting charges? That is 1,15,000 is the amount of bill. You are getting it discounted at the rate of 12%, and you are getting it discounted 2 months prior to the maturity date. So for 2 months you will compute the discount. Now this discounting will be equal to 2,300. So out of 1,15,000 you will receive 1,12,700 only, because your bill amount is 1,15,000. Isn't it or not? So discounting of bill. Your entry will be discounting, your narration will be discounting of bill. Correct? After discounting the bill, then on the maturity date you will move over to 4th of February happens to be your maturity date. In fact, this is 1/12/20. Now you will reach 4th of February 21, maturity date of new bill as we analyzed in the chart. Correct? On the maturity date, first of all, you are going to pass the entry for dishonor. You will debit the drawee account, K2 account, and you will credit the party who was having the bill on the date of maturity to bank account. Because bank paid 500 as noting charges, so you will try to recover 1,15,000 bill amount plus noting charges from K2, and this amount will have to be paid to the bank. That is why you are crediting bank. Dishonor of bill and noting charges paid. Dishonor of bill. So you will recover this much now, and you will have to pay this much to the bank. However, before that, what happens? On the same date, a new bill is being drawn but with some interest, but K2 is not paying the interest at this moment, so you will debit K2 and you will write here to interest. How much will be the interest? Because new bill amount is 1,15,500 and rate of interest given to us is 10%, and new bill is for 2 months, so for 2 months you are going to compute the interest. This interest will be equal to 1925. 1925. Correct? Now you will receive a new bill, BR account debit to K2 account. Now this bill amount will be, because new bill 1,15,500, that is 1,15,000 for the original bill, 500 for the noting charges, 1925 for interest. So total amount which you are supposed to receive from K2 happens to be 1,17,425. 1,17,425. Getting my point? Acceptance received for new bill. You have received the acceptance. However, when you reach the maturity date, correct, then what happens? This bill is also cancelled. Now we just pay attention here. This is the chart I made initially. Actually, maturity date of the new bill is 7th of April, but question states that 1 week before. 1 week before means 31st of March 21. Correct? If I will subtract 7 days, I will come back to 31st of March 21. So on 31st of March 21, the new bill, the first new bill is cancelled. So you will write here 31st of March 21. When you will cancel is almost similar to the dishonor. So once again you are going to debit the drawee account, K2 account, correct? K2 account debit to BR account. His original bill will be given back to him because this bill was held by you. So you are not going to write this time here to bank. New bill was in your hands, correct? So don't write to bank here. So this bill is cancelled. 1,17,425 will have to be cancelled. However, on this date, he pays you 2,500 and asks you to draw a new bill. On this date, that is on 31st of March 21, when new bill was cancelled, he pays 2,500, 50,000. So bank account debit. In fact, okay, bank account debit, cash account debit, whatever you may like to write. 2. What's the name? K2. He pays you 50,000. He pays you 50,000. However, this 50,000 includes, question has stated that this 50,000 including interest of 2,500. Correct? He pays 50,000 including interest of 2,500. So you have received this much. Now yet another request is made, please draw us a new bill. So when you are going to draw a new bill, again you are going to write here interest So K2 account debit to interest account. Interest will be 2,500. But this interest he has paid. In fact, it is better to pass this entry first and then this entry. Okay? It is better to pass this entry because when he is paying this 2,500 as interest. So 2,500 interest, that means for the second bill. Now, 31st March, once again, you will draw another bill, correct? BR account debit. BR account debit. What will be the amount of the new bill? 2 K2. See here. He was supposed to pay you originally, prior to this bill, he was supposed to pay you 1,17,425. Just have a look over the cancellation entry. You can get this figure from there. Correct? This entry has been written here. When our first new bill was dishonored, he was supposed to pay us this much of amount. And we are drawing yet another bill. In fact, that is second new bill. But second, because we are drawing a second new bill, we will charge interest of 2,500 as is given. So logically, total amount due is now 1,19,925. Isn't it or not? Logically, this much is the amount due. But out of this, he pays 50,000. This 50,000 includes 2,500 for interest. But anyway, we are least concerned. Out of this much, he pays this much. So balance amount is actually 69,925. So this is the remaining amount. So second new bill will be of 69,925. 69,925. Is it clear to you or not? Clear? Yes, sir. So if it is clear, then second new bill drawn or third bill drawn, you can also write second new bill drawn. New bill and this new bill is met on the maturity date. And it is after one month. So we will add 1 month to 31st of March. So we will reach April. And grace days will be 3/3 of April 21. I think in the chart when we made originally, we did a slight mistake. This is the chart. Actually, old bill is cancelled on this date. So maturity date will be 3rd of March. In fact, 3rd of April, 31st March, April. Not April actually, in fact, it will be May, 3rd May. It will be 3rd May. Correct? So, you have receive the amount now. Your entry will be bank account debit or cash account debit. To BR account. Second new bill matured or honored. And amount will be 69,925. Bill honored. So these are the entries which you are supposed to pass. Correct? Now, name of the other party. What is the name of the other party, please? Books of. So far we wrote the entries in the books of K1, now K2, 1st of December 21. Purchases account debit. You will write here 2K1. Amount is 1,15,000. Purchase of goods. Same date. Acceptance of bill. K1 account debit to bills payable account. Correct? Amount will be 1,15,000. So I will write this way. Acceptance given. Acceptance given. Now, bill gets discounted, but you are not going to pass any entry for the same. You will directly reach the 4th of February 21. Bill got dishonored. Bills payable account debit. 1,15,000 worth of bill. Noting charges are there. You will write noting charges. Noting charges 500. 2. You will debit original drawer K1. You are supposed to pay 1,15,500 to K1. Who will pay ultimately to bank? Dishonor. Of bill. Correct? Now you will reach. Now on this date, many things are happening. First of all, interest payment, because you are asking for a new bill. Interest account debit. Interest you are not paying, so you will credit drawer K1. We have already computed the interest on the original bill 1925, and now you are accepting a new bill, so you will write K1 account debit to bills payable. Now new bill amount will be 1,17,725. 1,17,725. This will be the amount of the new bill. This is interest due. This is new bill accepted. Now, on 31st of March, 1 week prior to the maturity date of the new bill, 31st of March 21, correct? This bill also gets cancelled, so your entry will be bills payable account debit. Your bills payable will come back to you. That is 1,17,725. 2. No noting charges this time. 2. K1. You will always credit the original drawer. First new bill cancelled. First new bill gets cancelled. Correct? Now, again interest element are there. Interest is a loss to you. Interest account debit, you are not paying the interest, you will credit K1. Interest is 2,500. Interest payable. Finally, you will write K1 account debit. Correct? You are supposed to pay 1,19,925. 1,17,725 plus interest of new bill. Out of that you pay 50,000 including interest. So you will accept another bill, 2 BP. That will be equal to 69,925. Acceptance for second bill. For second new bill. Second new bill. And then on the maturity date, that is 3rd of May 21, your bills payable will come back to you and you will make the payment. Your payment will be 69,925. Boring chapter, definitely, but we can't help it unless and until we will practice lots of questions. So we come to the end of this session. Welcome again. Now we are picking up case study 19. I have already told you we have to practice a lot before we reach very significant topic of accommodation of bill. But right now we are picking up case study 19. And under this case study, we shall analyze when bill is endorsed and it is dishonored. Correct? This is case study 19. Case study 19. Okay. Now in this case study, we are going to analyze what? Y9 purchased goods for 3 lakh on 1st of June 2021 from X9. So it is given in the question that on 1st of June 21, X9 is the drawer. X9 is the seller. In fact, X9 is selling the goods to Y9, although it is given in the question that Y9 is purchasing the goods. Correct? The sale amount is, or purchase amount is, rupees 3 lakhs. Further, it is given that on the same date, bill is accepted after 3 months. So, on the same date, bill is also being accepted. Tenure 3 months. Further, it is written 3 days later. 3 days later means we received the bill on 1st of June, so on 4th of June 21, 3 days later, it is given that X9 endorsed the bill. X9 endorses the bill. Endorses the bill to Z9. Endorses the bill to Z9. Now, Original bill is 1st of June 2021. So maturity date will be 4th of June, 4th and 3 months, 9/21. So on maturity date, bill is dishonored. On maturity date, bill is in the hands of Z9, the endorsee. Maturity date, BR dishonored. It is dishonored for non-payment, and Z9 pays noting charges. Of course, the party who held the bill on the date of maturity and did not receive the payment shall have to pay the noting charges. Z9 pays noting charges. Noting charges of rupees 1,000. Then 3 days after the dishonor of the bill, 3 days after the dishonor of the bill got dishonored on this date. So 3 days after that, that is 7th of September 21. 3 days after the dishonor of the bill, X9 made the full payment to Z9. Now X9 made the full payment to Z9. Obviously Z9 will take hold of us and hold us responsible. So X9 pays Z9. What amount X9 will pay to Z9? X9 will pay 3 lakh for original bill plus noting charges incurred by Z. Correct? 15 days after the dishonor of the bill, 15 days after the dishonor of the bill, that is 19th, we will add 15 days. On 19th of September 21, Y9 paid rupees 1 lakh to X9. Now Y9 drawee pays 1 lakh to X9. X9 and requested him to draw a second bill for the balance plus 4,500 for the amount of interest payable after 2 months. And new bill is also drawn. The new bill amount will be see here, out of original bill of 3 lakh plus noting charges 1,000. This was the amount due from X9. Sorry, Y9. Correct? He pays 1 lakh. So remaining amount is equal to 2 lakh 1,000. And he requested him to draw a second bill for the balance plus interest. So plus interest, you add plus interest. Interest is 2,500. So the bill amount must be equal to 2,03,500. Correct? It is also given that the new bill is for how many months? 2 months. So maturity date of the new bill will be 3 grace days 22, 2 months 11. So maturity date. On the maturity date of new bill, maturity date of new bill, maturity date of new bill, it is honored. So this is the entire what we call analysis as far as case study 19 is concerned. So I will keep the sheet here. Correct? This helps in solving the question, isn't it? Once you analyze the question in a complete and comprehensive manner, it becomes pretty easier then. So now we can start the question. Books of Y9. In fact, what is the name of the drawer? X9. books of X9. Books of X9, correct? 1st of June. This is the date. On this date you are selling the goods to Y9. Your entry will be Y9 account debit to sales account. You are selling the goods for rupees 3 lakhs. Goods sold. Goods sold. Then it is given that on the same date you are receiving the bill also on 1/6/21. You are receiving acceptance BR account debit to Y9 account. Three lakhs. Acceptance received. Acceptance received. 3 days later, correct, it is given in the question. So 4th of June 21. Drawer X9 endorses the bill to Z9. So Z9 account debit, that is endorsee. Z9 will be considered as endorsee. Endorsee is the person to whom bill is being transferred. Endorsee account debit 3 lakh to BR account. Now BR is in the hands of Z9. On the maturity date, if bill would be honored, it would be Z9 who is going to receive the money and not you. That is X9. BR endorsed. On maturity date, we computed the maturity date, which was 4th of September 21. Bill was dishonored. Time and again I am telling, if bill would have been honored, you would not have received the cash. Actually, cash is being received by Z9. However, bill is dishonored. So if bill is dishonored, you are going to debit Y9, that is drawee. Correct? And you are going to credit the party who is having the bill on the date of maturity. This time Z9 is the party. But Z9 will claim from X9 3,01,000 and X9 will claim 3,01,000 from Y9. So Y9 is being debited in the books of X9 because X9 has to take 3,01,000 and he is crediting Z9 because X9 is supposed to pay 3,01,000 now to Z9 because Z9 did not receive the amount and incurred 1,000 as noting charges. BR dishonored. BR dishonored. It is given in the question that 3 days after the dishonor, that is 7th of September 21, X9 pays to Z9 full amount. So Z9 account debit. So we paid Z9 3,01,000 to cash account. So, amount paid to Z9, full amount. Full amount means whatever was due. Whatever was due, we paid it out. Then 15 days after the dishonor, which happens to be 19th of September 21, Y pays 1 lakh to X9. Y is paying, Y9, the drawee, is paying us 1 lakh. X cash account debit to Y9 account. Out of 3,01,000 which we are supposed to receive from Y, now 1 lakh has been received. Amount received against bill of 3,01,000. So 2,01,000 is still due from Y. Now interest entry, because he's asking us to draw another bill. So interest account debit, but he's not paying the interest, sorry, not interest. Y9 account debit to interest account. He's not paying the interest to us at this moment. If interest would have been paid, I would have written cash account. Interest amount is already given to us, 2,500. In this question, right. Interest due. Interest amount due. Now we will reach the, now we are going to draw another bill upon him, correct? On this date we are going to draw another bill, BR account debit to Y9 account. Acceptance received for new bill. Acceptance received for new bill. New bill amount will be, as I said, 2,03,500. 2,01,000 plus interest. Correct? On the maturity date, we computed the maturity date of the new bill, which is 22/11/21. We will receive the cash account debit. On the maturity date, now bill is in our hand. We have already paid the endorsee. So we are going to receive the money. Cash account debit to BR account. We will receive the cash and return back the BR. 2,03,500. Correct? New bill honored. Entries in the books of X9. Now we shall write books of Y9. First entry will be on 1/6/21. Purchases account debit. Purchases account debit. He purchased the goods worth rupees 3 lakhs. He purchased the goods worth rupees 3 lakhs from X9. If you want to write the narration, purchase of goods. On the same date, bill is accepted, X9 account debit to BP account. Acceptance given. Acceptance given. Bill was endorsed, but we are not going to pass any corresponding entry for the same. We will directly reach the maturity date of the bill, 4th of 9/21. On this date, our bills payable will come back to us. Had we honored the bill, we would have simply written BP account debit to cash account. But we did not honor. In fact, now, onus or burden of noting charges will fall upon us. It's a loss. Noting charges, account debit. Party who paid noting charges of 1,000 will claim it from us. 2. We will credit original drawer X9. Actually, we are supposed to pay now 3,01,000 to X9, and X9 is supposed to pay to Z9. Bill dishonored. Then after 4th of 9, on what is happening, then after 3 days, X9 has paid to Z9, so no corresponding entry will be passed in our books because that is the transaction between X9 and Z9, so we are not involved in it. However, on 19th of 9, 15 days after the dishonor of the bill, we paid to X9 1 lakh. X9 account debit to cash account. We paid 1 lakh. So as you can see, out of 3,01,000, 1 lakh has been paid, amount paid. Then we will pass the entry for interest on the same date. Interest is a loss to us. Interest account debit to X9 account. Because we are not paying the interest, so we will credit X9 2,500. Again, X9 is getting credited by 2,500. Interest due. Now, on this date, you will give acceptance for the new bill. 19th 9/21. X9 account debit to BP account. That is 2,03,500. 2,03,500. Acceptance for new bill. Correct? Acceptance for new bill is being given. Just wait. Now, on the maturity date, the maturity date is, just wait where the chart is, 22/11/21. 22/11/21. You honored your promise. Your bills payable will come back to you, and you will simply write to cash. You'll pay simply on the maturity date whosoever brings your bill to you. Bill honored. So 2,03,500. 2,03,500. Is it clear to you or not? So this will be the entry which you are going to put up in the books of X9. Has question asked anything else? Yes, question has also asked us to pass entries in the books of Jet 9. So, books of Jet 9. Jet 9 is Endorsee. You have endorsed the bill to him. When Jet 9, now you presume as if you are Jet 9, so you are receiving on 4th of June, because on 4th of June, bill has been endorsed to you. So it is a bills receivable for you, and you are receiving the bill from X9. You are receiving the bill amount, you are receiving the bill to the tune of 3 lakhs. BR received from X9. Correct? Now, on 4th of September, that is maturity date, 4th of September 21, when you took this bill to Y9, he did not pay the amount. So, bill got dishonored. When bill will get dishonored, you will once again debit X9. Because you did not receive the money from Y9, so you will get hold of X9. And you will write here to BR. You will return the bill to X9. Take back your bill. And I have paid noting charges also. To cash, write in bracket noting charges. So, endorsee will tell that your 3 lakh worth of bill did not materialize, and I have paid a noting charges of 1,000. Now you pay me 3 lakh 1,000. So, Jet 9 will debit X9 by 3 lakh 1,000, and he has received this money, remember one thing, on 7th of September. 3 days after the dishonor, he received his amount, cash account debit to X9 account. Debit 3 lakh 1,000. Amount received. Dishonor of bill. So a comprehensive question to make you practice hard. And in this particular session, the topic which we are picking up is very, very significant, important, formidable, no doubt about that, and a little bit clumsy also, but we on our part definitely are not going to leave any stone unturned and making it as simple as possible, as normally we do. Correct? So here we go and pick up this particular topic. First of all, let me explain. Accommodation of the bill. This is the topic which we are picking up, but what exactly this accommodation of bill? Before we start the journey to comprehend this tedious topic, let me make it clear that so far whatever we have discussed regarding the bill of exchange, so far our discussion was confined to trade bills. Correct? Trade bills. If you remember, in all the questions we had seen actually that A was drawing a bill or X was drawing a bill upon B, and earlier it used to give that he sold the goods. That means in case of trade bill, there is some consideration which was passed from the drawer of the bill to the drawee, and drawee is then accepting the bill. Are you getting my point? For example, if I sell the goods to you, so consideration, goods is coming to you. You are supposed to pay me some amount. So for the same, you are accepting a bill. So generally, in case of trade bills, some consideration actually involves. However, we are going to actually now discuss the accommodation of bill. What is this accommodation bill? Accommodation bill. Don't write at this moment. It's a rough work. Accommodation bill. Under accommodation bill, the name itself is very interesting, isn't it? Under accommodation bill, we will see no consideration passes. For example, just try to comprehend and grasp this way. For example, Mr. A is there. He is in desperate need of some money. Correct? and he has a friend by the name of Mr. B. Now Mr. A approaches his friend Mr. B and tells his what we call a story that I am in desperate need of money. I urgently requires, let us say, 1 lakh rupees. So please give me 1 lakh. Now B says, what the hell you are talking about? Even I myself is not in a very healthy position as far as finance is concerned. I am also very down and out, and you are asking me to actually pay 1 lakh to you, where I will get the money this to actually arrange, and then how I will pay you. So I am not in a position to pay you. A, of course, get a little bit saddened by the statement of B, but still B is his very fast friend. So A tells B, okay, well, you are not in a position to pay me out of your pocket. You can do me a favor. I will draw a bill upon you. I will draw a bill upon you. Let us say on 1/1/21, A says, I will draw a bill upon you. You simply sign that bill, accept that bill. Now Mr. B may again actually feel very what we call amused by this statement. B will tell, you have not sold any goods to me, neither you have lent any money to me. Why the hell in the world I should actually sign this bill? Now A then emotionally blackmails him. He says, you are my fast friend in thick and thin times. So please, at this moment, actually I am in need of money. You need not require to worry about the signing of the bill, because the person who will sign the bill, ultimately he will have to clear the bill also. But anyways, ultimately A is able to persuade his best friend B, and B signs the bill. Let us say signing the bill means now, let us say signing the bill means he has accepted the bill, and now bill has been drawn and accepted. Let us say this bill has been accepted on this particular date itself. Now, what A will do? On the same date, A approaches his bank. A approaches his bank and discounts the bill. Of course, bank will charge something, but important thing is that, let us say bank charges 1,000 and pays 99,000 to what we call Mr. A. But the point here is that problem of A gets solved because he gets the cash readily. He did not get the cash from B directly, but indirectly he got it from B. He got the bill discounted from bank, and bank has paid him 99,000. Important thing is that we presume this bill is what we call of 3 months tenure. So maturity date will be 4/4/21. Now because on the maturity date this particular bill is in the hands of bank, now bank will approach Mr. B because he is the person who has signed the bill. So he is supposed to clear the bill to the bank. But the problem is that B has signed the bill without any what we call consideration received. So it is always presumed that just prior to the maturity date, A will pay Mr. B the amount of bill so that B is in a position to clear the bill. So this is a sort of arrangement to arrange the finance with a mutual understanding. So that is why it is known as accommodation of bills, because both parties are accommodating themselves in this arrangement. Generally, the drawer is known as accommodated party, and the party who signs the bill is known as accommodating party. Generally, drawee is the accommodating party, and the person who draws the bill, who is in need of the money, is known as accommodated party. Drawee is known as accommodating party. Are you getting my point? This is one thing. So I hope you have been able to understand the meaning of accommodation bill. Correct? Under the accommodation of the bill, the drawer will draw the bill upon the drawee, and he will get the bill discounted. Because on the maturity date bill is in the hands of the bank, bank will approach the drawee. So we always presume that before the maturity date, this person will pay back the money which is equal to the amount of the bill, so that this person is able to clear the bill. Number one, 3 situations are generally visualized under accommodation of the bill. One situation is similar to the one which I just mentioned. Let us say first situation. In this situation, what we see, one person is drawing the bill, correct? And he is getting the bill discounted from the bank and using the money till the maturity time. Let us say maturity time is 3 months. So whatever money is received, he is using all along. But before the maturity date, just prior to the maturity date, he is under an obligation to pay to the drawee, the person who has signed the bill, so that drawee can clear the bill. That means the first situation is where other party is accommodated, but only for the benefit of the drawer. Only for the benefit of the drawer means the person who is drawing the bill, he is using the money. This is one situation, not very tough, later on we will see. There could be a second situation which we can visualize this way. Even in this situation, one party will accommodate the other party. Let us say Mr. A again draws a bill. But this time, after discounting the bill, let us say bill amount is 1 lakh and tenure is 3 months. Correct? He has drawn the bill. Mr. B has signed the bill. A will discount, get some money. Let us say he gets 99,000. This amount, this time, will not be used by A all alone. This time, let us say there is an agreement between these two that we will use the proceeds equally. So 99,000 after discounting the bill is the amount which has been received by Mr. A, and he will keep half the money with himself and half the money will be delivered to Mr. B. So this time, drawer is accommodating the party but for the mutual benefit. This is second situation. Even in this case, one party is accommodating the other party, but the proceeds are being utilized by both drawer and the drawee. Just prior to the due date, he will provide his share to Mr. B so that B is in a position to clear the bill, because half of the proceeds has already been received by what we call Mr. B, isn't it or not? This is second situation. And we will see the third one, which happens to be a bit what we call complicated. In this situation, both parties may draw upon each other a bill and they will utilize the proceeds, correct? And accordingly its settlement will be done, but how the settlement will be done, that's the moot point, and that we are going to discuss later on, correct? So three situations can be what we call visualized as far as accommodation of bill is concerned. So this was with respect to accommodation of bill. First of all, come along with me and write a note. Accommodation of bill, correct? So that whatever we have said, you can retain, because I have seen sometimes students tend to forget. Just let me settle the sheets. And accommodation of bill. Accommodation of bill. Right here, I will simply write AOB. AOB means accommodation of bill. That is not a legal short form. Just for the sake of writing, I am making it. So, accommodation bill are drawn and accepted with no consideration passes. The drawee party does not receive any goods or services with no consideration passed or received. Bills which are drawn just to oblige. Just hold on. Hello. Recording. Extremely sorry. So, I was talking about bills which are drawn just to oblige a friend who is in need of money, who is in need of money, with sole intention of raising funds for ready cash are known as accommodation bills. Correct? This is what we explained. I'm using the short form AB, accommodation bill. The drawer of the bill, is known as accommodated party, while the party which accepts the bill, that is drawee, is called accommodating party. Correct? Drawer or accommodated party, discounts the bill and utilizes the proceeds either himself or proceeds are utilized mutually. He may use the proceed all alone, or they may utilize the proceeds, are utilized mutually. Just prior to the due date, 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 comma, drawer provides funds to drawee, that is accommodating party, to clear the bill. As there is mutual understanding, as there is always a mutual understanding, a mutual understanding between the parties, mutual understanding is that I will draw, I will provide you the funds. Between the parties, these bills are called accommodation bills. Difference between trade bills and accommodation bills. Trade bills and accommodation bills. Let's pick up some differences so as to make you understand better. Just a moment I said no consideration passed, but generally, right here, trade bills are drawn by creditors. I sold goods to you, so I am your creditor. I will draw the bill. Are drawn by creditors and accepted by debtors. Accepted by debtors. These are not drawn by creditors. Because they are not drawn by creditors, automatically it means they are not accepted by debtors. When A drew a bill upon B, A was not the creditor of B, neither B was my debtor, correct, in our example. Creditors, this much is enough. This is first major difference. There are basically three main differences. Second, no consideration is involved. No consideration passes or received. Sorry, I'm talking about trade bills. Consideration passes and received. That means trade bills are generally drawn against proper consideration. Here no consideration is involved. No consideration is involved. Consideration passes or received. Third, trade bills are proof of debts. Trade bills are proof of debts means I have sold the goods to you and I am supposed to receive some money from you. So this bill is a legal proof because it is signed by you. Trade bill is proof of debts. However, accommodation bills, AB, accommodation bills are not proof of debts, are not proof of debts. Law does not consider accommodation bill as proof of debts. So these are the things which you must be in the know before we attempt, as I said, questions on accommodation of bills. Is it clear to you? So these are the theoretical parts, and just have a look over question number 21. Question number 21. I told you 3 situations we may face, isn't it? I'm talking about the first situation now. This is case study 21. In this case study, first of all, let's go through it and try to understand it. Mr. A9 accepted a bill for 20,000 drawn by B9. Now B9 is drawing a bill upon A9. So B9 draws a bill upon A9. A9 accepts it. And this bill is drawn and accepted on 1st of October 21. Correct? Question states the bill was discounted by B at 6% per annum and tenure of the bill is 3 months. Tenure is 3 months. It is written 3 months bill. Further, amount is rupees 20,000. So B is in need of money. He draws a bill, discounts it. Just hold on. Hello. हाँ, आज एक काम करना 8 बजे चलेंगे, ठीक है? 8:30 कितने बजे चलोगे? 8:30. मेरे को वही डाउट लग रहा है ना, मेरे को आज मेरा थोड़ा काम है, 1:30 तक आ जाओ तो अच्छा है. ठीक है, तो मेरे को फोन कर देना, ठीक है? 8 बजे करीब फोन कर देना. Extremely sorry, so examination time is still on and queries need to be addressed. So that is the reason I am keeping my phone on. So I hope you will bear this much of what we call inconvenience. Anyway, so on 11021 I was going through the question, and the question states that further, where is the question? Right. Now bill was discounted by B9 at 6% per annum. We presume, exact date is not given, so we presume on this date bill has been discounted. B now discounts the bill. What will be the amount of discount? 20,000 given to us at 6%, 6 by 100, and 3 months prior to the date of maturity. So 1,200 divided by 4 comes to 300, so 300. That means out of 20,000, 300 will be discount, and 19,700 is the amount which B9 will receive, no doubt. But he will receive the money, so his financial problem will get a little bit solved. Correct? Now what happens? Prior to the maturity date, because this bill has now reached in the hands of the bank. Now bank will approach A9. But A9 was logically under no obligation. He signed the bill only for the sake of friendship. So, on the maturity date will be 4, 3 days grace, we will add 3 months, so we will reach January and we will reach 22. On 4th of January 22, that is maturity date, two things will happen. B9 will pay A9 on this date. B9 is supposed to pay bill amount to Mr. A9, correct? So that A9 could clear this bill. Are you getting my point or not? This is how the entire story will unfold. I hope you are able to understand. So now we are in a position. So this was the question, correct? So I'm keeping the question over here now, and we are in a position to do and solve it. It is simple, not very tough one. So in this case, one party is drawing the bill, but only the drawer is using the money. This is the first situation, correct? So, books of B9. Books of B9, now we pick up and we will write the date 1st of October 21. Don't write entry for sales, correct? You are simply receiving the bill signed by your friend, BR account debit. Name of your friend is A9. This is the name, correct? Debit. Write the amount 20,000. Bill BR drawn, or simply bill drawn, and accept it. Then we got the bill discounted on 1st of October 21. We shall write the entry, bank account debit. No corresponding entry will be made in the books of A9, as you know now. Bank account debit, 19,700 is the amount which we shall receive. We shall write discounting charges. Discounting charges. We computed the discounting charges to the extent of 300. Now this bill will move out of our hand and will move into the hands of bank. But we got the money. BR discounted. Important point is that we got the money. We can use the money for 3 months and we can overcome our financial crisis. Now, on the maturity date, that will be 4th of January 22 next year. On this date, two things will happen, correct? First of all, it is the duty of B9 to pay to A9. So that is why entry passed by B9 will be like this: A9 account debit to cash account. $20,000. He will make full 20,000 payment. Amount paid to clear the bill, or to meet the bill, whatever you may like to write. Now, we are not going to pass any entry for the honorment of the bill, correct? Because we are not honoring the bill. So on our side, story is over. Now we move over to the books of what we call A9. Books of A9. Books of A9. In the books of A9, first entry will be made on 1st of October 21. We accepted a bill. We will write what is the name of the party, B9. B9 account debit to bills payable account. $20,000. acceptance given. Correct? Acceptance has been given. No corresponding entry will be passed in our books for discounting, but we will reach the maturity date now, 4th of January, 4/1/22. On this date, we are going to receive cash account debit. First, we will receive the amount from B9. We'll write here to B9. Amount received. Now we will honor the bill. Bank will come to us with the BP, return the BP to us. We will pay 20,000 to bank. Bill honored. So this is the entry which we are going to pass, correct? So welcome again now, and in this particular session we are going to take case study 22, mutual accommodation. In fact, that is second variation of accommodation of bills, correct? Case study 22 now we are picking up. In the first case study we saw that drawer himself was utilizing the money. Now in this case, drawer of course is going to draw the bill accepted by the drawee, but whatever amount after having discounted the bill is received, that will be mutually what we call divided. So this time for the mutual benefit we are going to see accommodation of bill, correct? Have a look over case study 22. I am going through the study. I am also putting it over here for the better comprehension. F4 draws a bill on 1,50,000 on Mr. K4 on 1st of January. So this is the date, 1st of January 21. On this date, F4 draws a bill. So on this date, he is drawing a bill upon his friend, let us say K4. Correct? Bill amount, as we can see, is rupees 1,50,000. Tenure is 4 months. Sorry, 3 months. Tenure is 3 months. Correct? The bill after acceptance is discounted by F4 at 6% per annum. So he discounts the bill. So after discounting, we are going to receive the money, no doubt about that. He discounts the bill. Discounts the bill. What will be the amount of discount? That will be 1,50,000. Rate given to us is 6%. And 3 months prior to the due date, we are discounting it, and we'll need calculator. So 1,50,000 into 6%, that comes to 9,000, divided by 4, that comes to 2250. So discount amount is 2250. So out of 1,50,000, we are receiving only 1,47,750. This would be the amount received by drawer F4. However, this time he is not keeping the entire amount with himself. This time there is a ratio, there is an agreement, that whatever proceeds will be there, I will keep 2/3 and I will give you 1/3. So half, 2/3 of the proceeds are going to be utilized by F4 and 1/3 of the proceeds are going to be utilized by K4. Even the discount will be shared in this particular ratio. Is it clear to you? That means half amount will be his and 2/3 amount will be this. 1/3 amount will be of K4, 2/3 amount will be of F4. Now, important point is that suppose without discounting, in fact, total amount of bill is 1,50,000. Indirectly, it also means out of 1,50,000, Gross amount of bill 1 lakh will be his, 50,000 will be his. Of course, they will have to bear the discount in their pocket. How much amount is moving, we can also compute this also, divided by 3. So 750 worth of discount, that is 1/3 of 2250, will be borne by him, and 1500 worth of discount will be borne by him, no doubt about that. Correct? But prior to the maturity date now, this time how much amount F4 will pay to K4? Point is this, because K4 has drawn the bill, ultimate burden to clear the bill will fall upon K4, because on the maturity date bank will come to a K4. So prior to the maturity date, it is the duty of F4 to provide his share, that is 1 lakh, to Mr. K4. K4 this time has already received 50,000, correct? So then he will be in a position to actually clear the bill. That is the situation here. So now we can actually what we call move over to the solution part of this particular question. Books of K4, books of, in fact, F4. Books of F4. First entry will be written on 1st of January. So 1st of January 21, you are drawing a bill. So first entry will be with respect to bill drawn, BR account debit. You are drawing the bill on K4, who is accepting it and returning it back to you. You have drawn a bill of rupees 1,50,000. BR drawn for mutual accommodation, if you want to write. For mutual accommodation. Immediately on 1st of January itself, F4, correct, discounts the bill. Bank account debit, because he is discounting the bill for rupees 1,47,750, as we computed just a minute ago. 1,47,750, this is the amount, full amount received by Mr. F4. Discounting charges will be 2250. So he discounts the bill. Now bill moves to bank. In fact, bill moves out of your hand into the hands of bank. BR discounted. So you discounted the bill. Next one. Now he sends the proceeds, correct? He sends 1/3 of the proceeds to his friend K4. So he will write K4 account debit. Share of K4 is 50,000, no doubt about that. Correct? And to discount, he will ask K4 to bear 1/3 of the discounting charges. That is his share, we computed earlier, 750, 1/3 of 2250, and he will send the cash, that is equal to 49,250. 1/3 proceeds, 1/3 proceeds, and 1/3 discount transferred. T/F transferred. Correct? Now, just prior to the maturity date, we will compute the maturity date. Maturity date will become 4th of April 21. Just prior to the maturity date, it is the duty of F4, as I said, to pay rupees 1 lakh, his share, correct? So, next entry will be K4 account debit. That is equal to 1 lakh to cash. So 2/3 amount sent amount of bill, of course, sent to meet the bill or to clear the bill. So this is the entry. Not a very tough task. I hope you are understanding what we call accommodation of bill. Seems tough, not tough actually, once the concept is scrapped and it becomes clear. So next one is K4, books of K4. K4 is the accommodating party, drawee party. 1st of January 21 accepts the bill. F4 account debit. 2. Bills payable account. Amount of bill is 1,50,000. Acceptance given for mutual accommodation, if you want to add mutual accommodation. Correct? Bill has been discounted by the drawer party. We are not going to pass any corresponding entry, but definitely the share received by us will be entered in our book also. So cash account debit. We are receiving our share. We are also bearing our share of discounting charges. 49,250 is the net amount which we would receive. 750 discount charges we would bear. We are receiving this amount from F4. One-third proceeds received. One-third proceeds and share of discount. Now, just prior to the maturity date, we will receive the share of other party, cash account debit to F4 account. That is 1 lakh. Two-third amount received from F4, of course. You need not require to write F4, it is narrated here. Now you will clear the bill. Bank will come to you, you will clear the bill. Your bills payable will come back to you. Bills payable account debit, correct? You will write the amount of the bill, that is 1,50,000, and you will pay to the bank. $1,50,000. Bill cleared, met, whatever you may like to write. Bill met on maturity. So this is the entry which you are supposed to pass. Is it clear to you? We'll pick up another case study to comprehend it a little bit more, what we call comprehensively. We pick up case number 23. Where is case number 23? In fact, case number 23 is absolutely ditto copy. That is for homework. You can do it by yourself. Case study 24 now we are picking up. Case study 24 actually is the third variation of accommodation of bill. In this case, we will see both the parties are drawing upon each other. Both the parties are drawing upon each other. So, this is a case of what we call, you can say, when each party or two parties and each what we call drawing bill upon each other for mutual benefit. So, we go through the question here. Mr. K2 drew a bill on K4 on 1st of November. 1st of November 21. This is the date. K2 is drawing a bill upon K4 for an amount of rupees 4 lakh. For an amount of rupees 4 lakh. Are you getting my point or not? Right. And tenure of the bill is 3 months. On the same date, first K2 is drawing a bill upon K4. Now on the same date, 1/11/21, K4 is drawing a bill. So first K2 drew a bill, now K4 is reciprocating, he is also drawing a bill. But amount of bill drawn by K4 is 5 lakhs. Correct? And again, tenure of the bill is 3 months. Tenure of the bill is 3 months. Both the party discounted the bill. So where is my scale? That is the problem. I kept it somewhere, but don't remember where I have kept. Well, found it, fortunately. K discount the bill. This bill has been signed by K4, correct? Now, K4 is discounting this bill. He is discounting this bill at 12% per annum. So 4 lakhs into 12% into 3 by 12. How much it will be equal to? 4 lakh into 12% divided by 4. 12,000. So discount amount is rupees 12,000. However, it is the duty of K2. Now first let me compute the maturity date. Since both the bill have been drawn upon each other on the same date, so maturity date will be same for both the bills, and both the bills are for 3 months tenure. Correct? If I will add here 3 months, first month I will reach the December, then I will read January and February. So 02. I will move over to the next accounting year, 22. and 3 days of grace. So 4/02/22, 4th of February 22 becomes the maturity date for both the bills. Logically, on the maturity date, logically, K2 should pay because he is utilizing the proceeds entirely, correct? So it is the duty of K2 to pay 4 lakh. It is the duty of K2 to pay 4 lakh to K4. And because K4, it is written, both the parties discounted the bill. So even K4 discounted the bill for at the same rate. So discount will be 5 lakhs into 12% into 3/12. That will be equal to how much? 5 lakh into 12% divided by 4. It becomes 15,000. No problem. Actually, we are not concerned with the discount amount. That is only for the sake of writing the entries. Now, the point here is that on the maturity date, because this bill has been drawn by K2 and it is the duty of K2 to clear this bill, so it is the duty of K4 to pay prior to the maturity date 5 lakhs to K2. Now, point here is that on the maturity date, before each party clears his bill, K2 is supposed to pay to K4 1 lakh, while K4 is supposed to pay 5 lakh. So instead of this, that he should pay 4 lakh and then receive 5 lakh, so simply we'll pass a net entry, because in accounts it doesn't look nice that first I should pay you 4 lakh and then I should receive from you 5 lakh. Instead, I will simply ask, because I am supposed to receive 5 lakh, so K2 will simply ask K4 to pay 1 lakh. So ultimately it means it is the duty of K4 to simply pay 1 lakh. So no need to pass these two entries. You got my point or not? Is it clear to you? So now we can move over to the entry part. Books of K2. First we are picking up K2. First November 21, K2 is drawing a bill. BR account debit 2. He is drawing a bill upon K4. That is rupees 4 lakh. BR drawn or acceptance received, whatever you may like to write. Acceptance received. Correct? However, on the same date, you also accepted a bill. Correct? On the same date, that is 1st of November 21, you accepted a bill. Your entry will be K4 account debit to BP account. Amount of bill, however, acceptance given by you is for a bill of rupees 5 lakhs. Correct? You will simply write acceptance given. Is it clear? Now, you will discount your bill which you had drawn. So, on the same date, 1/11/21, you are discounting the bill, your 4 lakh worth of bill. Because you are discounting the same, bank account debit, 12,000 is the discount out of 4 lakh, so 3,88,000 you would receive, and discounting charges will become 12,000, and we have already computed that. So discounting charges will be equal to 12,000, isn't it or not? You will write here to BR account. This bill now has gone over to bank. BR discounted. Now, what happens? You are not, amount received by you will not share this amount, because this time it is not given that amount discounted is shared. There is no disagreement, correct? So this time we can say drawer of the bill is utilizing the sale proceeds all along. So now you will reach the maturity date, correct? Maturity date will be, we computed 4th of February 21. Logically, prior to the maturity date, your duty was supposed to pay 4 lakh, but as I said, we did not require to pass that entry. And logically, you were supposed to receive 5 lakh. Because your duty is to clear not the bill of 4 lakh, your duty, you are K2. Correct? You are drawing for a bill of 5 lakh and you are drawer of a bill of 4 lakh. You are drawee of a bill of 5 lakh. So your duty is to clear a bill of 5 lakh. So you were supposed to pay 4 lakh but receive 5 lakh. So instead, what we are going to do, we are going to receive only cash of 1 lakh. So cash account debit to K4. That is 1 lakh. Net amount received. Just hold on. Hello. So net amount, that is 4 lakh which we were supposed to pay and 5 lakh which we were supposed to receive. So instead of paying 4 lakh and receiving 5 lakh, we are simply receiving 1 lakh. So when we are not paying 4 lakh and receiving 1 lakh, it automatically means in our pocket there is 5 lakh. Now we will clear the bill regarding which we had given the acceptance, correct? So we had given the acceptance for 5 lakh worth of bill. Remember this thing. So bank will come to you with a bill of rupees 5 lakh on the maturity date, bills payable account debit 5 lakh, and you will honor this bill. You write here to cash account 5 lakh. Bill met on maturity. Bill met on maturity. These are the entries in the books of K2. Now we shall move over to K4. Books of K4. 1st of November 21. We have also drawn a bill. BR account debit. We have drawn a bill upon K2. However, we have drawn a bill of rupees 5 lakhs. So I shall write here 5 lakhs. Correct? Acceptance received. Acceptance received. So you have received acceptance for this bill. Also you have accepted a bill. K4 account debit to bills payable account. You have given acceptance for 4 lakh worth of bill. So your duty is to clear 4 lakh worth of bill. Acceptance given. Correct? You are given this acceptance. Now, you got your bill discounted which you had drawn. Bank account debit. 5 lakh worth of bill has been discounted. So, 4,85,000 you would receive and use it all alone. Discounting charges. Discounting charges rupees 15,000. 2. Your BR shall move out of your hand, shall reach in the hands of the bank. Correct? BR discounted. Now, logically, you had accepted a bill of 4 lakh, other party should pay you 4 lakh, but you are also supposed to pay 5 lakh. So that amount you will simply deliver to the other party, correct? That is, maturity date was 4th of February 22. So you will pay K4 net amount. One lakh. Net payment made. Correct? Now, on the maturity date, bank will come to you with a bill of rupees 4 lakh because regarding that you had given the acceptance. Now you will clear that bill. Bills payable account debit. Bank will come with a bill of rupees 4 lakh signed by you. You will receive back your bill and pay rupees 4 lakh to the bank. Bill met on maturity. Bill accepted, met on maturity. If you want to add bill accepted, met on maturity, or simply bill met on maturity or honored. So even the third variation we have covered with respect to accommodation of bill, and in the final session, last session, we shall take 2 tricky questions to finish it off with vengeance. I hope everything must have come up to your expectations. So after having almost completed this particular chapter and all the facets relating to this particular chapter, we are moving over to almost now the final part of this particular chapter. So in the last one, we were discussing the accommodation of bills. We will still continue with that as I promised. So we are picking up question number 25. It's a pretty tough one, no doubt about that. So just to equip you with a little bit higher level problems, we are picking up this one. Question number 25 is the one which we are going to pick up. So here we go. Question number 25. What does the question states? Just have a look over the study material supplied by us to you. The question reads like that. Actually, sheet I have kept it over here. This is the question number 25. I am going to read the sheet and read the question, and of course simultaneously I am going to analyze the question. P draws a bill for rupees 60,000 and R accepts the same. So here P draws a bill. P is drawing a bill. P is the drawer. P is drawer. Correct? He is drawing a bill upon R. So R is the acceptor, that is drawing. That means finally the liability to pay the bill will lie upon R. He draws a bill for rupees 60,000. Written over there, bill amount is rupees 60,000 and bill is for the mutual accommodation, and he discounts the bill. The time period is not given so far. Let me have a look. P draws a bill for 60,000. R accepts the same for the accommodation of both of them to the extent of P 2/3 and 1/3. P discounts the same for 56,400. Remits the proceeds to R. Right now, tenure is not available. So he is drawing a bill for rupees 60,000. It is given that bill is for mutual accommodation. It is also given that this bill, whatever proceeds will be there, which will be discounted by the drawer. Drawer will receive the proceeds. He will discount the bill and he will receive the proceeds. It is given that he discounted the bill for 56,400. Because bill is of rupees 60,000. Bill amount is 60,000. He is discounting it for 56,400. Isn't it? 56,400. Which means 3,600 is going to be the discount. So net proceeds will be 56,400 of this bill, and it will be the discounting charges. Now, this particular amount will be shared between P and R in the agreed ratio of 2:3. It is given in the question that P and R have already decided to share the proceeds in the ratio of 2:1. So if we will compute what we call 2/3 of 56,400, that will be near about 2/3 and 1/3, fine. 37,600 and 18,800. Similarly, discount is 3,600. 2/3 will be 2,400 and 1/3 will be 1,200. So this 60,000 worth of bill is shared this way, isn't it, or not? This 60,000 worth of bill is shared this way around by both these parties. So out of 40,000 share, P is going to receive net amount of 37,600. He will bear 2,400 discount charges. Out of 60,000, 1/3, 20,000 is share of R, correct? But he will receive net proceeds of 18,800. Anyway, you have to be more cautious about the full amount. 60,000 worth of bill, 40,000 belongs to P, 20,000 belongs to R, correct? However, you need not require to skip out of your memory, correct, as we have been telling you since the start of this particular topic, in fact, that the drawer, Mr. P, has drawn the bill on R. R has signed the bill. He is the acceptor of the bill. So finally on the maturity date, the liability will be on R to honor the bill. Now the question further states that before the due date, just before the due date, R draws another bill. This line suggests that on the due date, R is not in a position to pay the money. That is why he is drawing the bill. In fact, you have to interpret it this way round. So before the due date, it is given before the due date, R is drawing another bill. So R is drawing a bill. Now R becomes drawer. He is drawing a bill. Bill amount is 84,000. He is drawing a bill. Bill amount is 84,000. Bill is being drawn upon P. So P now becomes dry. P becomes dry means P becomes acceptor, and finally this bill will have to be paid by P because P has accepted this bill, correct? Well, this bill is again discounted. So P discounts the bill for 84,000. This 84,000 worth of bill is being discounted, correct? So if we will compute out of 84,000, logically bill is being discounted, 84,000 bill discounted for 81,600. 81,600. It is discounted for 81,600, of course by R, because R will receive the bill back from P and he will discount it. Bill amount is 84,000, no doubt about that. Correct? This has been discounted for 81,600. Net proceeds 81,600 and discount amount will be 2,400 without an iota of doubt. Now, just pay attention. Logically, just forget for a while 2,400 discount, just forget for a while. Logically, out of this 84,000, share of P and share of R should be how much? 2/3 share belongs to P, as it has already been decided between these two parties that whatever the proceeds would be there, we shall divide the same in the ratio of 2:1. So if I would compute, where is the calculator? Yes, calculator is lying here itself. So 84,000 divided by 3, that makes it 28. So logically his share is 28,000 out of 84, and his share will become now 56,000. Of course, these shares are without discount, correct? Just forget discount for a while, no problem. Question states that before the due date, R draws another bill for 84,000 on P in order to provide funds to meet the first bill. So this line makes it absolutely clear that as far as first bill is concerned, logically what should have had happened on the maturity date? The first bill amount is 60,000. Just talk about the gross share, forget about the discount for a while, correct? 2/3 is already kept by P. He has discounted the bill and he will send 20,000 to R. On the due date, logically it is the duty of the R to actually honor the bill. Actually, before R would honor the bill, quite obviously, P will have to remit him his share of 40,000. Logically, it is the duty of P to remit R 40,000 his share. And he has already with him 20,000, because out of 60,000, 20,000 was already given to him. So logically now P was under obligation to pay R 40,000 prior to the due date, so that R gets what we call money in hand to what we call honor the bill. Unfortunately, prior to the due date, this did not happen. That means P did not send 40,000 to him. But you need to keep that in mind, that P was obligated to actually pay 40,000 to R, which he didn't. Correct? Moreover, in the question, it is not given that prior to the due date, P has remitted his share. It is not given. So you shall presume that P, who was supposed to pay 40,000 to R prior to the maturity date, did not pay his share. Now what is happening? Now R has drawn another bill. R will receive the proceeds, forget discount for a while, 84,000. Now R will tell to P, your share is 56,000. I am supposed to send you 56,000, but you were supposed to pay me 40,000. You were supposed to pay me 40,000. Now you need not require to pay that 40,000 to me. You were supposed to pay me 40,000, you keep 40,000 with yourself, and I will give you 16,000 more. So that means your share is given out of this bill. Are you getting my point? You are supposed to give me 40,000 and I am supposed to give you 56,000. So I am simply asking you, don't give me 40,000. I will give you 16,000 now. It means 56,000 is given to you. Are you getting my point? So 16,000, now we will remit to P. We will remit to P 16,000. Are you getting my point or not? And from the earlier bill, my share is 20,000. Just have a look. We have to understand this problem very, very carefully. We did not send 40,000 to him. We were supposed to. Actually, we were supposed to pay him 56,000. So, whatever we were supposed to receive from that fellow, 40,000, we did not send now. And now we have decided to send him 16,000. That means out of 56,000, we are keeping 40,000. So, out of 84,000, the proceeds which we would receive, I will utilize 60,000 in payment of the first bill. Don't forget it. I will utilize in payment of first bill. The first bill is worth rupees 60,000 and R is supposed to pay that bill. So, indirectly it means out of 84,000, I am presuming I have received 40,000 from P, which he did not pay me logically, but I am presuming because now in my hand there are 84,000 rupees. So out of that 84, I have plugged out 40,000. That is from his share. From his share of 56,000, I plugged out 40,000, and from my share I plugged out 20,000, so that I have now 60,000. I will pay the bill. It means out of second bill, now we are left up with this much of amount, 16 plus 8, 24,000. We will send 16,000 to P, correct? When we will send 16,000 to P, it automatically means we have received 40,000 and we have given him 56,000, correct? It automatically means, so now out of this bill, we will send 16,000 to P. Of course, we will keep with ourselves 8,000. But you should not let it escape out of your memory that this bill is 84,000 and share of P is 56,000 and share of R is actually 28,000. This bill has been accepted by P. So on the maturity date, P is supposed to, actually logically on the due date, P is supposed to pay 84,000. But how he will pay 84,000? Out of 84,000, he already has his share 56,000. So logically, prior to the maturity date, it is the duty of R to send 28,000 to P, so that P should clear this bill of 84,000. Unfortunately, it is given later on that on the due date, P became insolvent. Because P became insolvent, P is insolvent. Quite obviously, he will not be able to now honor this bill. Because he will not be able to honor this bill, remember one thing, on the maturity date of this bill, the bill is in the hands of the bank. So bank will come to P and ask for 84. P says, I am insolvent, I am not in a position to pay you. Then bank will definitely take hold of what we call Mr. R. He will hold Mr. R responsible because ultimately bill has been signed by the P, but it was drawn by R. So now bank will definitely take hold of R. Indirectly it means because of insolvency of P, the liability of 84,000 to pay this bill, the liability of 84,000 now shifts to R. This liability now shifts to R. Ultimately, R will now have to pay 84,000. Logically, in this liability, our share was 28,000 and 56,000 was the share of P. If P would not have become insolvent, I would have sent my share 28,000 prior to the maturity date. But now I will not send that share because now I know, I means Mr. R. I know that ultimately now I will have to honor this bill. So why should I send 28,000? In fact, the burden of his share will fall upon my shoulders. So quite obviously, R will demand 56,000 from P. But P could pay, as in the question written, only 50%. So out of 56,000, only 50% could be paid. So that means out of 56,000, we are able to receive 28 and we won't be able to receive 28,000. It's a bad debt for what we call R. Are you getting my point? So this is the entire story of this particular question. So now we are in a position to actually draw out the entries to finish it off. Is it clear to you? I hope you have been able to understand the logics of this particular question. That is very important. Generally, when such sort of questions will be asked, the examiner will ask the entries either in one of the party, in fact. So either of these two parties, and that was the point. Dates are not given. So first of all, books of P. In the books of P, if you will go through that chart which I just drew out, correct, we found over there that we have drawn a bill. So entry number 1 will be with respect to bill drawn, BR account debit. We have drawn this bill upon R to our account. Amount of bill is 60,000. Bill drawn. Bill drawn. Now this bill will be discounted. I will write the entry bank account debit. This bill has been discounted for 56,400 as is given to us. Discounting charges. Discounting charges account debit. That is 3,600. You are gonna write now to BR. This BR is now in the hands of the bank as you have discounted it. 60,000. Discount it. Bill discounted. After discounting the bill, you are under obligation to remit 1/3 share of P, share of R, sorry. So you will write here R account debit. Out of 60,000, 20,000 belongs to R. To cash account. 2/3 share, we computed his share, 18,800 net amount we will send him, and we will ask him to bear 1/3 of discount. Discount was 3,600. 1/3 of the same will be 1,200. So share and discount transferred. On the maturity date, just prior to the maturity date, R drew a bill upon us, correct? We will write here BR account. In fact, R is drawing upon us. So we will write R account debit. That means we are accepting a bill now. R account debit, we shall write to BP. New bill is for 84,000, which is being accepted by us. Acceptance given. After giving your acceptance, the other party will discount. You will not pass any entry for the same. but you will pass the entry for receiving your share. I told you, other party discounted this bill, received the proceeds, but your share 56,000 will not be remitted. 40,000 which you were supposed to pay him will be subtracted. You will receive only 16,000. So you will write here cash account debit. Discount account debit. Two. You are receiving this money from R, correct? Your gross share is 16,000. Discount is 2,400, and out of 2,400 your share will be 1,600. Discount is 2,400 and your share will be 2/3, 1,600. So net amount you are going to receive only 14,400 after discount, correct? Share received. Now, on the maturity date, Mr. P failed to honor this bill. So we shall write R account debit, dishonor entry, and we shall write here too. We had accepted the bill, correct? Sorry, our bills payable will come back to us, extremely sorry. We are the acceptor of the bill, and I am going to write here to R. This bill is worth rupees 84,000. I failed to pay this bill, so logically I am supposed to pay 84,000 to R, but out of 84,000, 28,000 I have already paid to him directly or indirectly, because this bill was discounted by R and our share was 28. So now I am supposed to pay him 56,000. Bill discounted. Bill dishonored. Correct? Now final entry. As I told you, because liability has shifted to R now. Now R is supposed to clear that bill 84, out of which his own liability is 28, but 56,000 was supposed to be the share of R. So a share of P. R will demand 56,000 from P, but P could not pay 56,000. How much P could pay to R? R account debit. Out of 56,000, we could pay only 50%. That is 28,000. We could not pay what we call 28,000, so that will be considered as deficiency in the books of P. This deficiency is a bad debts for R. Correct? Payment of 50% dues. Payment of 50% dues. So this is how you are supposed to do this question. Welcome again. As I said, we will cover up some more questions. You will have to write this question along with me, correct? So this is a past examination question on accommodation of bill. Past examination question. Correct? This question has struck in the examination once. It is on accommodation of bill. So let me see whether you are in a position to do this question or not. What is the question? You will have to write this. P drew a bill of rupees 30,000 on Q, who accepts it for mutual accommodation. Mutual accommodation. Proceeds are to be shared in the ratio of 3:2 respectively. That means share of P will be 3/5 and share of Q will be 2/5. The bill is discounted. The bill is discounted by P for 29,000 and 2/5 proceeds remitted to Q. After discounting, he remits 2/5 to Q. Similar to the last question, before the due date, whenever this line is written before the due date, automatically you presume that first bill is not cleared straightway. Before the due date, Q draws another bill for rupees 40,000 in order to provide funds correct, in order to provide funds to meet the first bill. This bill is discounted. This bill is discounted for rupees 38,500. 38,500 and first bill is met. First bill is met. And rupees 5,100 remitted to P. Before the maturity of the second bill, P becomes insolvent and Q receives a dividend of 40 paisa in a rupee in full settlement. This is the question. Correct? So now we shall analyze this question. As usual, P draws a bill of 30,000 on Q because it is P who is drawing a bill. P, drawer. He is drawing a bill of rupees 30,000 on Q. So Q is the acceptor. Because he is the acceptor, liability to clear this bill will lie on the shoulders of Mr. Q. Correct? Now, this bill is discounted for how much? 29,000. This bill discounted for 29,000. Obviously, this bill will be discounted by P because P has drawn this bill. Now, out of 30,000, if I am going to compute, and 1,000 will be discount, no doubt about that. If I am going to compute the gross amount, correct, that is 3/5. So share of P will be 18,000 of the gross amount I am talking about. Similarly, if I am going to compute the share of Q, 2/5 will be equal to 12,000. This is the gross amount. If you want to compute the share of discount, you can do so. Share of discount, that will be equal to 600, I think so, and it will be equal to 400, 3/5, 200. Logically, you should not forget this thing. On the due date, logically, Q is supposed to pay this bill, but prior to payment of this bill, it was the duty of P to remit 18,000 to Q, and Q need to arrange by himself his share 12,000 so that this 30,000 worth of bill could be paid. But unfortunately, this did not happen. In fact, Q drew another bill. So now Q is drawing a bill. Now Q is drawing a bill upon P. P becomes acceptor. He becomes drawer. Bill amount is 40,000. Now Q will tell to, wait, before that, let me make it clear. This bill has been discounted for 38,500. This bill has been discounted for 38,500. Obviously, this bill must have been discounted by Q, obviously, because he has drawn the bill. So 1,500 is discount. Now, logically, share of P, that is 3/5. If I will compute 3/5, it will be 24,000 of the gross amount, logically, out of this bill. No doubt. And his own share should be 16,000. But first bill is not yet paid. So what they are going to do, now Q will tell to P, you need not require to send me your earlier share of 18,000. you need not require to send me, because I am going to subtract your share 18,000 from your share 18,000. Correct? Because you were supposed to send me 18,000 on account of the first bill. First bill was for rupees 30,000, wherein the shares of the respective parties were 18 and 12. Similarly, Q will say, well, my share in order to pay the first bill was 12,000. So now we will settle the first bill 30,000. So it is being presumed that you have paid to me 18,000. So now I am going to send you only 6,000. Of course, this is before discount. So logically, now I am supposed to send you only 6,000. Are you getting my point or not? Is it clear? And out of 16, it is my gross share in 40,000, but out of this, I will use 12,000 to pay off the first bill. So I will be left up with only 4,000 of my share. But point here need to be noted is, logically their shares are 24 and 16, you should not let it escape. But they are left up with only this much of money. Are you getting my point or not? They are left up with only this much of money, 6,000 plus 10,000 out of this bill, because 30,000 utilized for the first bill. So 40,000 is the proceeds, share is 24, Q will tell to a P, I have 40,000, but out of 40, your share is 24 and you are supposed to pay me 18, which I am not going to, which you need not require to pay me now. I will pay you 6, so logically 18 plus 6, now you have received 24. 18 you were supposed to pay me, I am giving you 6,000 more, so you need not require to pay me 18, so your share 24,000 is almost now delivered. So this way, we are going to pay him 6,000 only because he was supposed to pay me 18,000, correct? Now, on maturity date of this bill, on the due date of this bill, liability to pay this bill is of P. Liability to pay this bill is of P. P is supposed to pay this bill of 40,000. In order to pay 40,000, P should arrange by himself 24,000 on the due date because his share of this bill is 24 and his share is 16,000 gross share. So on the due date of this bill, logically Q should have given 16,000 to P and P should have arranged 24,000 by himself so that 40,000 of this worth of bill could be easily what we call cleared. Unfortunately, on the due date, now P becomes insolvent. Because P becomes insolvent, similar to the last question, he becomes insolvent. This liability will now shift. Now, Q will become responsible. Q will be liable to clear this bill. Q will become liable to clear the bill. Because Q will become liable to clear the bill, obviously Q is going to feel very bad about it, but he can't help it anymore. In this bill, share of Q is 16,000. Obviously now Q will not send his share to P because P has become insolvent. In fact, to clear this bill, Q was supposed to pay 16,000 to P, which he will not send now because P has become insolvent. In fact, in order to clear this bill, not only his own share, he will have to pay 24,000 also. Actually, this 24,000 is share of P. Quite obviously, Q is going to demand 24,000 now from P. Q is going to demand 24,000 from P. But P could pay only 40%, similar to the last question. If I am going to compute 40% of 24,000, that comes to 9,600. So 9,600 we paid and balance 24,000, that is 14,400, is deficiency. So similar to the last question, as you can see, this question is running, isn't it? So not tough one to crack. I'm very sure you should be in a position to do this question now. So question has asked entries in the books of P. So write the entries in the books of P. Books of P. First entry, dates once again is not given. BR account debit. We have drawn a bill upon Q. Amount of bill is 30,000. Acceptance received or bill drawn. We shall discount this bill now. Bank account debit. We have discounted this bill for 29,000. Discounting charges will be 1,000. Discounting charges. $1,000. This bill will now move over to bank. Now bank will hold this bill till the maturity date. Bill discounted. Third, now we will remit the share of Q. So Q account debit, out of 30,000, full share of Q, 2/5 is 12,000. Correct? We will write here 2 cash. Discount is 1,000. Out of 1,000, 2/5 share is 400. So we will ask Q to bear 400 of discount. 11,600 net amount will be received by Q. Share of proceeds and discount transferred. Now, on the due date, we accepted, just prior to the due date, we accepted a bill. We shall write Q account debit to bills payable account. We accepted this bill for rupees 40,000. Acceptance given. Acceptance given. After receiving this bill, other party will discount it and we need not require to pass any entry corresponding to that. In fact, now that party will send us our share. Cash account debit. Discounting charges account debit. Because other party has discounted the bill, so some portion of that discount will have to be borne by us. Q is sending. Remember one thing, new bill is 40,000, out of which, as I told you, my share is 24, but I will not receive 24. I was supposed to pay him 16,000, so 24 less 16, as I did here also. I was supposed to pay him 18,000 in fact. So now 24 minus 18, only 6,000 I am going to receive. So 6,000. Now discounting charges. Bill has been discounted for 38,500, 1,500. My share will be 900. See here, discounting charges, I am doing it here. 1,500 is the discount of the new bill, and out of that my share is 3/5. So I will have to bear 900 worth of discount, and 5,100 will be remitted to me net. Are you getting my point? Share of proceeds and discount received. Correct? Now, we means Mr. P is supposed to honor this bill, but he failed to do so. So his bills payable on the maturity date will be produced to him by the bank, because bill is in the hands of the bank. Bank will produce BP, correct? But he did not pay. So BP account debit to, he has accepted this bill for R. He will write here to R, 40,000. When we are writing to R, it means liability is shifting back to R, correct? BP, bill dishonored. Because liability now shifted to R, and in this bill your share is 40,000, and R will have to clear this bill, so R will definitely ask you to give him your share of 24. You didn't. You paid only 40%. So your entry will be R account debit. You were supposed to pay 24,000 your share to R. You could pay only 40%, 9,600 as we computed earlier. And this much you could not pay, deficiency. Deficiency was 14,400. We have already computed this earlier. So payment of dues, correct? So this is how this particular question will be done. Is it clear to you or not? So I hope things have now become very clearer to you. So with that, we finish this particular chapter, bills receivable. Hope it must have come up to your expectations. And quite obviously, as always, we always wait with bated breath to have your feedbacks. So here we close down now, and in the next time when we shall meet, we are going to come out with something new. But as far as this particular chapter is concerned, it is over.